All right, and we're live. Then, ladies and gentlemen, thank you for tuning in to another edition of our Twitter Spaces here because Bitcoin. I want to thank you all so much for taking the time to participate in our discussion with Ben Cowen from Into the Cryptoverse, who is joining us once again. And just as a reminder, this space is being recorded off of YouTube, so you can check out this replay of this particular space up on that respective channel. And if you guys are enjoying this conversation, feel free to follow myself because Bitcoin and also Ben Cowen and keep up to date with everything that Ben is doing. And we're also joined by Max on the panel. And further along into the space, our other team members from Because Bitcoin should be joining us as well to partake in the discussion. So, Ben, I want to welcome you on again, man. I know it's been a couple of months since our previous conversation, and a lot has happened since then, right? We tested 31K, which was previous support during the last bull market. And it seems that, and I believe Max has said this yesterday during market check, how previous support, once that's broken, eventually becomes resistance. But with that being said, Ben, I want to welcome you on, man. How are you doing today? And what's going on, man? Good to have you on again.
Yeah, thanks for having me. Pleasure to be here as always. Yeah, a lot has happened over the last couple of months, so excited to talk about that. And just answer any questions you guys might have.
Yeah, no problem, man. So I guess we can touch upon. There was this chart that you had posted about price action leading up to about 12 months out from the halving, and it seems like we're actually following a mixture of 2019 and 2015, where we're kind of having this choppy yet upwards price action, and I wanted to know from your perspective. I know the last time that we spoke, we were sort of talking about how both Bulls and Bears are going to get wrecked. So over the previous 2 months or so since the last time that we spoke, is there any data that you've seen that might suggest that we could perhaps retest levels such as 40 to 50K? Because it seems like every other month we have this airdrop, we have a crazy airdrop, some meme coin comes out into the market that hits almost $1 billion in market cap, and we just hit a next level higher, we dip, everyone freaks out. So I want to know your thoughts on that. I'm not sure if you keep up with more of the risky side of things in the crypto market, right? We had the Blur airdrop, we had Arbitrum airdrop, and now we have these frog coins, Peppy, going up like crazy. And so to me, it's sort of indicative of like this sort of invisible QE, right? Even though USDC and the USDT printers aren't on, we seem to have like these tokens just being printed out of thin air that seem to take us higher.
Um, yeah, so I'm not that familiar with. I mean, I'm familiar with Arbitrum, of course, but I'm not familiar with all the ones that you just mentioned, other than maybe just seeing them trending on Twitter at some point. Um, yeah, I mean, I think since the last time we spoke, as you said, like Bitcoin was at 24K, and since then it dropped to like what 19.5 or 19.6, and then popped up to 31. Um, and I sort of specifically answer your question: is Bitcoin going to 50K now? I don't think so. I think Bitcoin will get to 50K, but I don't think that that's a likely outcome until like later 2024 or the 2025 timeframe. Um, I think that, I also just sort of I speak to my own experiences in the space, like you mentioned. It sort of seems like we're following somewhat of a combination of 2015 and 2019, which I would generally agree with. We also know that the 2015 and 2019, sort of the pre-halving years, I would treat them as a very important year in sort of the cyclical behavior of Bitcoin, because it's more so the time-based capitulation component that sort of weeds any last stragglers out that would maybe just be considered a tourist. Um, in 2022, like so in like the bear market years, you have 2014, 2018, and 2022. It's basically just down only, for basically the entire year. And because there's a significant amount of volatility, it does keep some people it does keep some people around. But typically, what we find in the pre-halving years is you get some volatility, but it's not nearly as much as what you get, say in 2021 or 2022. It's more so we just sort of chop within a pretty well-defined range for the duration of the year, and it's essentially the time based capitulation component. So you have price based capitulation and time based capitulation. Um, so the pre halving years do a good job, I think, of sort of reset the sentiment in the space, and getting everyone back to being kind of level headed as much as we're ever going to be anyways, um, and sort of setting ourselves up for the halving year, and for us going back to QE, and so on and so forth. I think that we're likely, and I think I said this in our last um, talk as well. I said that I think Bitcoin's going to have one more scare before before we really see the run up to 50K. I think we're going to have one more scare, and I think I said that it's probably going to happen in Q3 or Q4 of this year. That's probably going to be my best guess. I think it needs to happen. It should probably happen before the halving, and it should also probably happen before we get an outright pivot by the Federal Reserve. Because once we go back to money printing and lower interest rates, I think that will be a more clear cut case for Bitcoin to go back to new all time highs. But yeah, I mean, so to sort of just summarize, to answer your question, I don't think Bitcoin's going to 50K this year. Um, I think we're just going to continue chopping around. We'll probably go back down. I'm guessing we're going to go back down as we head into the summer months. We normally do. It happened in 2022, in 2021. It happened in 2019 and in 2018. The only real year in any time recently where it didn't happen was in 2020, but that was also coming off of that massive like 60-70% capitulation within the span of like 2 weeks just before the summer. So we had quite a bit of a tailwind. That was also when we were in quantitative easing, and basically 0% interest rates. So I think that I'm going to stick to my outlook on this year. I think it's the year where both sides get wrecked, an equivalent amount, and that basically just means 6 months of green, and it means 6 months of red, more or less, like plus or minus 1 month on either side. But that's what the pre-halving years have shown us, and I'm going to continue operating under the assumption that like this time won't be different.
That was really great and insightful. Thank you for that, Ben. And as Wabi mentioned, it's really great to have you back on a because Bitcoin space, and it's always just a treat speaking with you. And I, for what it's worth, I do generally agree with everything that you're saying. I think that price has more or less reached what I would consider to be, or pretty close to be, its extremity or its range high for this year. And I reduced some exposure personally to assets in the cryptoverse a little bit earlier in middle to late of Q1, and looking back, that may have been slightly early, but I do really. I agree with you on this idea that we're probably in for one more scare, and going back and looking at previous bottoms or accumulation phases, it's rare that we just kind of like go straight up off the bottom without any sort of like either double bottom or really high time frame, high or low. But I do have a question for you about this idea of potentially being in a recession in the second half of this year, and I'm sure it's something that you've toyed with, just for the sake of thinking through things in its entirety. But this is the first potential recession that Bitcoin has ever existed through. And I say potential recession because I guess technically we're not in one right now, but it kind of looks like we're heading towards one. And I've heard the argument thrown around really all of this year that Bitcoin was created after the great financial crisis to give people the opportunity to opt out of the broken traditional financial system. How much credence do you give the argument that Bitcoin is millennial gold and is poised to perform well during a recession, similarly to how gold performed well during the 1970s, despite frustrating equity market conditions?
Yeah, so that's a good question. So if you look at a gold chart and overlay recessions, there's actually a lot of times where gold actually goes down in a recession, but then it can explode right after it. There are cases where it goes up during the recession as well. But even if you look back to 2019 when we were not in a recession, but there was a recession scare. We did have an inverted yield curve in 2019, and the recession came in 2020. But if you look really closely, like if you overlay Bitcoin and gold in 2019, we know that Bitcoin rallied for the first half of the year, right, until June, and then it basically spent the next half of the year going down. Gold rallied for the first half of the year. It had a slight pullback when risk assets did, like when Bitcoin had a pullback, gold had a slight pullback, but then gold continued going up, for the second half of the year, even though Bitcoin continued to go down. So I do think there is merit in the idea that Bitcoin is this like digital gold, but I don't know if we are far enough ahead. Like I don't know if we're far enough along yet in the sort of the adoption cycle of Bitcoin for that to be sort of just taken for granted, right? Like I do think that Bitcoin is a great asset. I think it will go to new highs. Will it hold up well in a recessionary environment? My gut says it probably won't. But I would also say that it would probably come out of a recessionary environment stronger than ever, because then one of the things that we've lived with here with Bitcoin for the last 10 years is basically, well, Bitcoin's never experienced a recession, right? Like that's been one of the big arguments against it. It's just only ever existed in a period of quantitative easing and relatively low interest rates. So, no one really knows what's going to happen when we go into a period of prolonged quantitative tightening and higher interest rates. But I would put forth the idea that Bitcoin will come out the other side, even if it means we have another scare later this year, and it'll just make it a stronger asset in the future, right? Because then we can say, all right, it survived a recession, and it's still here and it's still kicking. We can't say we're not going to be able to say that about every other cryptocurrency, but I do think we'll be able to say it about Bitcoin. So, my gut says that and by the way, I mean Bitcoin did experience very very briefly a recession back in 2020. I mean it was technically a recession. We did technically have an inverted yield curve in 2019. I'm not trying to suggest that the inverted yield curve predicted the pandemic, but what I think the inverted yield curve does is it identifies conditions that are sufficient to create a recession, right? So like it showed us that the economy was already very weak, and all it took was one more thing to basically send us into a recession. Um, so I think that when you look back at 2020, we saw what Bitcoin did during a recession very, very briefly, and it wasn't great. I mean, it sold off just like everything else sold off, right? Everything basically sold off. But then what happened, right? The Fed pivoted, they printed trillions, and then Bitcoin shot back up again. Um, so, I think we're likely just going to see something similar. I think that it won't be as quick this time. Like it might just sort of be more so that time based capitulation, right? Like similar to the back half of 2019. When you look at that, I mean, if you take the 2019 peak and then look at what happened the next 9 months, Bitcoin basically just trended down for 9 months straight after the 2019 peak. And then after that, it went into its bull market. Because I mean, when I was there when Bitcoin went to 14K, and I was calling for I was cheering for new all time highs. I mean, I didn't have a YouTube channel then, so fortunately the receipts aren't going to be there. But I was very hopeful that maybe Bitcoin would go to new all time highs in 2019, and it didn't. And we also had an inverted yield curve, um, and I mean, we just sort of saw sentiment wane for a while. But I kind of sit in that camp. Like I think that we are likely going to get a recession, or we're going to come very close to one. And if you look at history, there's plenty of times where
Hey Ben,
we either
you're a bit faint, brother. I think you're covering your mic.
Oh, can you hear me now?
Yeah, you're good, brother. You're good. You're good.
Sorry, yeah. So I was just saying, like, if you look at history, there's plenty of times where the leading indicators that are flashing for a recession, we either get one or we come close to getting one. And in essentially every single case, the S&P goes down, right? Whether we get a recession or whether we don't, because there's going to be weaker economic activity for a little while, courtesy of the Federal Reserve. It's just likely going to put a headwind on risk assets in general. So, um, yeah, I think that Bitcoin is. I think the idea of digital gold is correct. Um, I'm not sure that I mean, but again, even if you look at gold, there are plenty of examples where gold sells off in a recession and then it shoots up coming out of it.
Yeah, thank you for that, Ben. That was a really well articulated and thought through answer. I do have another question for you, and it's something that you touched on just a bit in the beginning. And I have your website pulled up. I've been a premium into the cryptoverse member for quite some time now. It's probably approaching a couple years now, and I really I was there when it was just a Google sheet in the very beginning. So I've really enjoyed the app and the website. It's a much better experience. So I commend you and your team for building that out. But I have it pulled up in front of me, and some of my favorite charts that I try to view on a weekly basis just to stay current on them are some of the bottom indicators, or the into the cryptoverse favorites. And one thing that I've noticed that is different about, potentially where we've bottomed here, and I say potentially because I'm not ruling out the possibility of taking out the current low of, I think it was 15.8 or 15.9. I think we should, at a minimum, we had a double top, right? We had a double top at 64, then 69, and it's going to be looked back on, and it is looked back on right now as probably one of the most epic bull traps of all time, was that sweep of the 64K high, and then we went straight down. And I think, of course, we can't rule out the possibility of something similar happening at the low as well. But again, I'm looking at your website, and a couple things I noticed is, one, that Bitcoin during this potential bottom did not breach the balanced price. So that's one difference between this potential bottom and previous cycle bottoms. And additionally, just using your own into the cryptoverse risk metrics for Bitcoin, if you look back at the first, and I don't say you because obviously you probably have this all memorized as you created it, but for everybody listening, if you were to go through cycle by cycle, 2011 to 2012, the Bitcoin global bottom occurred when the risk level for Bitcoin was 0.05, which, of course, for those that aren't familiar with the scale, is extremely, arguably and debatably, relatively safe time to buy Bitcoin. In 2015, it bottomed, I believe, at like 0.05. In 2019, it was at about zero point 0.1. And this time, we didn't actually breach zero point 0.1. So I'm curious, and my next question, it's a bit long-winded, so bear with me. But you've talked about this idea of a summer lull, actually, in one of your more recent videos. And this idea of the year leading up to the halving is typically a year where both bulls and bears get wrecked, and bulls get a little bit excited and frothy, thinking we're going to all-time highs. And bears sometimes get caught off guard, thinking that the downtrend leading up to that year before the halving will just continue forever, and Bitcoin's dead and it's completely over. And Peter Schiff was right all along. So both tend to get wrecked and a little bit frothy at local extremities. So my question for you is, what do you have carrying the most weight? Is it time-based capitulation? Is it your own risk level sort of capitulations? And when do you go from this mindset of cash is king to Bitcoin is king?
Yeah, that's a good question. So I would like to clear a couple of things up. There's obviously this like academic idea, right, of is the bottom in or not, and that's really only what people ever want to know. That's all they really care about. Is the bottom in? The reality is, even if the bottom is in, most of the people asking me that question wouldn't even buy on a lower low, anyways. A lower low could come in the middle of the night when everyone's sleeping, and no one necessarily bought it. It's like it was like in the summer of 2022, when we rallied up in August to, it's like 25K or something. I said back then that we're likely going to go back down at the end of the year. But a lot of people a lot of people didn't want to hear that, because they were convinced that June was the bottom. And back then, I think a lot of people assumed that I don't have Bitcoin, right? But that's not true. I've maintained forever that a DCA approach is by far the best approach. And I even explained this back then too. I said, look, guys, Bitcoin's at 20K. I think it's going down, right? I think it's going to go down. I think it's going to put in go. I think it's going to go put in a new low, but it doesn't mean you shouldn't buy it at 18K, at 19K, at 20K. It doesn't matter, because even if it goes down, you fast forward a few more months and no one's going to care, right? Like, think about it. Does anyone right now who bought Bitcoin at 21K back in early November, right before the sell-off, do they care, right? Do they care anymore? Even though it capitulated all the way down to 15K, they don't really care, because they DCA'd in. Yes, they were underwater for a little while, but eventually the market came back. And that's why I continue to say, right, for most people, the DCA approach is just, it's so much better. It's far superior than trying to time the bottom, because what happens is, even if the bottom's not in, if you go into crypto thinking exactly where the bottom is, then what happens when you get a 2x rally, right? Like, it makes people FOMO in at the new local top. So, like, I saw a lot of people do that in 2018 and 2019, right? Like, a lot of people. And by the way, I mean, just for full disclosure, I mean, I in 2018 I thought 6K was the bottom. um, I was convinced myself that 6K was the bottom. We were at that price for like 4 months, and I was like, we've already gone down so much. Why do we need to go down anymore? Um, and so, I bought Bitcoin, and I also bought, some altcoins as well. And then the end of the year came, and the market ripped me a new one. And I just continued to DCA back then, both Bitcoin and altcoins. And and then what happened, right? We had the 2019 rally. Bitcoin went up 4x. Some of the altcoins went up around the same amount. But there were some people that refused to buy. And when Bitcoin got back to 14K, that's when they decided to jump in, because they're like, oh crap, like, it's almost back to the all-time high. um I'm gonna miss the boat. And so, had they just DCA'd at 6K, and then at 3K, and then at 6K again, like, they wouldn't have cared. But then they ended up, you know coming back in at the new local high. And then they had to live through a 9-month bear market, and this was after the 2018 bear market. They had to live through another 9-month bear market, knowing that they didn't buy at 3K, they didn't buy at 6K. They YOLO'd everything in when they thought we were going to go break new all-time highs again. So, the sort of the thing that I've reiterated on the sort of the premium site that you said you're a member of is that, as far as crypto goes, Bitcoin is king, but it doesn't mean that you shouldn't have cash on hand as well. I actually am fairly, I have a fairly hefty cash position right now in terms of percentage, because I just want to make sure that if a recession comes, I'm prepared for it, you know, and if it doesn't come, then I have to be okay with my strategy of fixed income investing, and then just being willing to take on the risk when I'm willing to take on more risk. The only thing I've bought in crypto in 15 months is Bitcoin. It's the only thing I've bought. And I buy it if it's below the point 0.4 risk level. It's not right now. It's not below 0.4 risk. Like, 0.4 risk is at like 21K. So, as far as buying Bitcoin, I think that a DCA strategy is going to serve most people the best. I think that trying to time the bottom is not really going to work out for most people, and they should try to figure out a different strategy. Now, as far as what indicators am I looking at? There's a lot of mixed signals. So there's some cyclical indicators that would suggest the bottom is in, right? Like if you look at things like the running 1 year ROI, if you look at the MVRBZ score, if you look at the Peel multiple, if you look at maybe some of the logarithmic regression charts, there's plenty of charts that suggest that it could be in. But there's also plenty of charts that would suggest maybe not, right? And some of those are ones you mentioned. There's the balance price. Normally normally the bottom's below the balance price, which hasn't happened. Normally you see the 30-day estimate of the supply and profit and loss cross, and the bottom occurs after that, which hasn't happened. Um, and then of course there's the social risk, which continues to go down and you know, has not convincingly shown us that it's that people have completely capitulated out. I mean, with the social risk continuing to trend down, showing that social sentiment continues to die off, it does still show that there's some people that need to that really ultimately need to get shaken out. But I'll tell you, one of the most convincing things that I want to see, and this will go, and I will stick to this, whether it means we get another low or not, is, and I've time people give me a hard time about this, but I'm telling you, the Bitcoin dominance is what people need to look at.
Hey Ben, you cut off there again, brother.
Oh, sorry. Can you hear me now?
Yeah, you're good, man.
Yeah. So the Bitcoin dominance, that is the key metric that I think people should watch. Um, and I know a lot of people don't agree with that, but it's actually a really great indicator for understanding if the excess in the space has been, you know, done away with, right? Like there's so much garbage that gets pumped up and, all these memes pumping and whatnot. Until a lot of that gets purged, I think you have to be open to the idea of Bitcoin not really having the strength that it needs to go to new all-time highs. If we see the dominance of Bitcoin break through this 50% level, and let's say it goes to 55%, 60%, then I start to think, all right, we now have the fuel necessary to go on a sustained run to new highs. But as long as we're sitting at these low levels, what it shows me is that there's too many people still speculating in the altcoin casino, and the altcoin casino is going to remain open until everyone loses their money in it. So I think there's this natural cyclical behavior of Bitcoin where Bitcoin goes parabolic, everyone YOLOs into altcoins because by the time Bitcoin goes parabolic and it reaches the headlines, normally the move's done with. People come in, they look at Bitcoin, they're like, well, it's already rallied. Let me go buy a shiny altcoin. They do that. And then they just get under the impression that Bitcoin is never going to make a move, right? It's never going to do anything. And then look what happened over the last 3 months, right? I mean, and we talked about this, and we talked about so Bitcoin dominance went up while Bitcoin pumped. The key thing that I'm watching for to flip bullish is I want to see the Bitcoin dominance continue to go up after Bitcoin USD goes down. So if we see Bitcoin USD come back in, like fall back down in the summer or in the fall, whenever I think it's going to start soon, whether it's now, whether it starts next month or in June, I don't know. But the key thing I'm watching is, does the dominance continue to rise on a significant pullback by Bitcoin USD? And if that happens, then I think we're getting really close to the point of saying, all right, we can finally start to be a bit more optimistic on new all-time highs. And I will stick with that whether it means we get a new low or not, right? So like if the dominance goes up, let's say it goes to 60%, and it kind of seems like the coast is clear and things are starting to look better, and Bitcoin only dropped back down to a price that's higher than the prior low, then I would be willing to concede at that point that it's just a higher low like 2018 and 2020. But 2015 shows us that Bitcoin put in a double bottom. And actually, on some exchanges in August of 2015, so in Q3, it actually put in a lower low on a wick on some exchanges. It did. Um, so that's really what I'm looking for. I'm looking for the dominance to go much higher, to show us that people are finally starting to go back to the sort of the blue chips of the space, Bitcoin, mainly Bitcoin, but I mean there's also Ethereum, but I still think ETH is in the process of bleeding back to Bitcoin. Um, and once all that is said and done, and Bitcoin reigns supreme again in terms of the dominance going well above 50%, then I will flip my stance and think that all right, we now have the conditions to potentially run to new highs. But I don't think that's the case as long as we still have altcoins making up such a large percentage of the market capitalization.
Ben, thank you so much for such a well thought out and descriptive response. I see we have Michael up on the panel. I wanted to bring him in, and he's an individual that also, pays attention to the broader market, just as you do, Ben, and presents some actionable conversation. So, Michael, I want to welcome you up, man. Thank you for partaking in this Spaces with Ben, bro. Good to have you on, brother.
Hey, thanks, Wabi. Thanks, Max, because Bitcoin and Benjamin, very interesting analysis. I wanted to hear your thoughts. What I like to look at when I observe the market is behavior, how an asset reacts to, say, a piece of news on an ongoing basis and whatnot. So I noticed one thing that I did when we had the whole banking crisis again, which was about a month ago now. I noticed Bitcoin initially dipped when we had that scare, if you remember, and then the Fed put everybody's fears to rest, so to say, by instantly bailing out Silicon Valley Bank. And I immediately said to myself, this is why Satoshi created Bitcoin. This exact reason right here. And I bought, and we're up about now we're only up about what 8,000, 9,000 off the top, off the bottom. But my point is, the reaction from Bitcoin definitely got my attention. In regards to how I reacted to that news. Secondly, on top of that, the whole idea of Bitcoin being created for these types of things. We have the whole inflation backdrop in the U.S., and we have the continuing, whether it's artificially creative narrative or whether it's a real narrative. You're seeing countries across the world move away from the U.S., and it looks to be pretty substantial. It doesn't look, it's not just one country. It's not just one, some small nation in Africa. It's the BRICS, and it's China, and it's everybody one after the other. So, and I noticed that since this has been happening, Bitcoin has been picking up some buying traction. So my question to you is, one, do you pay attention to stuff like that? And number two, I have to say, I've been in the market for about 20 years, and I want to say that, and I'm sure others can agree with me, that this is probably the most confusing macro environment I've ever been a part of in my life. And I can't really make heads or tails of what is going on as far as the big picture goes, economic wise. But my main question, I guess, is do you believe that Bitcoin may have put in the bottom due to all these uncertainty factors that I have mentioned, plus the idea that we're bailing out banks again, the idea that people are moving away from the dollar, and that larger institutions with a lot of money to protect may start moving their money into Bitcoin because of those reasons. I think those are very, very important things to consider with Bitcoin, with what is going on today. And great analysis. I really appreciated it.
Yeah, I mean, you're right. I mean, Bitcoin was sort of created out of the financial crisis, and we know why. I mean, the idea that we just sort of print our way out of every single issue that happens is kind of absurd, and all it ever does is sort of lead to the debasement of the fiat currencies. And so that's why we look towards something like Bitcoin for refuge, to say we know that the Fed can't just print more Bitcoin, thereby diluting the valuation of Bitcoin. So I do think there is some merit to that. I also I imagine that Bitcoin does certainly move with various news events. I'm honestly not that into following the news cycles. I mean, I see the headlines and whatnot, but I'm probably not the best person to sort of be sort of inform people on the direction of Bitcoin based on a certain news event. I think to some degree the bottom that we saw back in November is also just a cyclical time for Bitcoin to bounce, right? It was about a year after the all-time high, which is when it bounced, and similar times. I mean, the other bear markets that we've had, we've seen Bitcoin bounce out of the end of the year or the early the following year. So I think there is some cyclical behavior to it. It also went down 77% before it bounced. And you know what else? I mean, Netflix went down 77% before it bounced. Meta went down 77% before it bounced. During the dot-com crash, tech stocks, the NASDAQ, went down 77% before it bounced. And with the tech stocks, they did put in a new low. I don't know that Netflix, that Meta or Netflix will, but there is some element of, yeah, like maybe the news matters to some degree. I'm not saying it doesn't, but we also saw, Bitcoin bounced out of it. Does that mean it's because it's our safe haven from the Fed? I don't know. I mean, Meta bounced more. Netflix also bounced. And I told people on the sort of the premium site that I have, back when Meta was less than 100, I said it was a great buy. And I said, look, I don't know. I think we're going to have a recession later on in 2023, but I think that there's a chance that Meta has, could have already bottomed at less than 100. So there's always these narratives, I think, that we can put with Bitcoin to say, okay, this is the reason it bounced. But there's a lot of other assets that also bounced similar amounts, if not more, than what Bitcoin bounced, since the end of the year. And Meta is a great example of that, bouncing even more. Meta is up. I mean, it was up more than 2x. It was $90 all the way up to what, like 220 or something. So there are some elements, I think, of like, I think as investors we always want to assign a certain narrative to things, and I'm not saying none of those narratives are correct. I do think one of the reasons that Bitcoin has been so successful over the last decade is because of people treating it like digital gold, treating it like an escape from the traditional monetary system that we've been accustomed to. But I also think on some shorter term time frames, it can somewhat just be noisy, as well. Like, Bitcoin could have bounced because of any number of reasons, and we'll really never fully know. And if Bitcoin comes back down, say the back half of this year, then there's an obvious narrative that's going to be assigned to that, right? And it's probably going to be a recession narrative. Um, whether that's the real reason, I don't know if we'll ever know. I mean, of course, we're very opinionated on it, and that's what I would say. But yeah, I don't know if I'm answering your question exactly how you wanted me to. I'm not super big on using news events as movements in the price, but I do think that in general, in bull markets, people don't care about bad news. In bear markets, people don't care about good news. And they just sort of ignore everything that doesn't fit with the momentum of the market. And then at some point we turn around, and then now it seems like, okay, all those bad news that we just heard for the last 6 months, now they finally matter, right? And in a bear market, all the good news that you hear for all the last 6 months, it doesn't matter while we're going down, and then all of a sudden it matters in when momentum starts to go back up.
Yeah, no, great point. I appreciate that. And yeah, no, I was I'm just getting to know who you are, so I'm getting familiar with exactly how you do things. And I just have one more last question. Compared to prior bottoms in Bitcoin, I apologize if you answered this already because I came in a little late. How did this recent bottom, technically wise, or whatever metrics that you are using, how did it measure up to past ones?
Somewhat anticlimactically, I think. Normally it's a capitulation that marks the bottom, like a 40%, 50% drop. And we didn't really get that. I mean, and again, like, back in August, I was very adamant that we would see another drop by the end of the year. I would have expected it to have dropped a little bit more. I think it only dropped, a few percent lower than where, I mean, it had already gone to 17.5, right? So, I mean, to go to 15.5 was not a huge change. It was a change, or 15.4. It was a change, but it wasn't the same type of capitulation that we've previously seen. And I think that's why you don't, while you do see some metrics optimistic that the bottom's in, there are other indicators that are not as optimistic, just simply because you didn't get that same type of unwind at the very, at the end of the year. So that's why I think the jury is still out on whether it's the bottom or not. I mean, I know there's a lot of people that are just absolutely convinced it's the bottom, and hey, like I've said before, they could be right. I'm just not willing to make that judgment until we really see how deep a potential recession or lack of a recession that there's going to be. And we're still, I mean, and one of the first things you said in your question, by the way, or in your statement at first, was this is the most confusing macro environment you've been in 20 years. And I think you're right. Like, and I don't think I'm nearly as seasoned of an investor as you are. I've only been I've only been investing for, for 10 years or so, because I mean, in '08, I was still in high school. So I didn't even experience the financial crisis firsthand. When the dot-com crash occurred when I was 10 years old. But I think one of the reasons why this cycle is so confusing in the macro is because the Fed is so far they were so far behind the curve in terms of raising interest rates to combat inflation. Normally, when we have inflation like it is, um, interest rates are already above inflation, well above inflation, before inflation starts to come back down, because the Fed is normally a lot more proactive in making sure that they squash it before it gets out of hand. This time, the Fed didn't start raising rates until well after inflation was, clearly trending higher. And I think that has caused a lot of people to sort of misunderstand the macro, because there's plenty of examples in history where the stock market bottoms when inflation peaks. So, like, if you look at headline CPI, if you look at the 40s and you look at the 70s, in basically every single case, the S&P bottomed when inflation peaked. Um, but the guess what else peaked, though, when the market bottomed? The Fed funds rate also peaked when inflation peaked, historically. And then the Fed funds, the Fed would start cutting rates as inflation came back down. This time is unlike the 40s and the 70s in that regard, because inflation peaked a while ago, but they're still raising rates. So there's not really a great period in history that we can compare this to, because normally the Fed has been much more on top of things than they are today. And I mean, with regards to interest rates, we know that it can take, 3 to 4 quarters for some of these interest rate hikes to be fully felt throughout the entire economy. I mean, it hits mortgage rates. I mean, it hits mortgages first, obviously. I mean, but in order for it to be felt throughout the entire economy, it can take a year. And we're still not even a year out from the first 75 basis point rate hike. We're only 1 year out from the very first 25 basis point rate hike. So I still think that all of these interest rate hikes that occurred last year, we still have to deal with how is that going to affect economic activity for months to come. And also, we should note too that historically, after the Fed pivots, that's not really a great thing for risk assets. But I would also put forth the idea that this cycle is very dissimilar from prior cycles, because again, the Fed funds rate didn't really start going up too considerably until after inflation had already peaked, which is very, very different from really anything we've ever seen before.
Yeah, absolutely. I just want to address a couple of points you said there in regards to the bottom in Bitcoin and the market itself. I mean, one of the reasons why I was I'm usually really good at getting very close to timing bottoms, only because since I started off as a stockbroker in 1999. Right after that, the market crashed. So my education as a trader, as an investor, was in a 3-year long bear market. So it wasn't fun. It was brutal. And it taught me a lot of things. And then after that, we had 2003 was the bottom of that. We ran up into 2007, then we had 2008, and then we had 2020. Now, in all three of these bear markets, there was a a bottom that you could look at in retrospect and say, hey, I could see why that was the bottom. We definitely did not even get close to that in this recent cycle with any assets, whether it be some individuals' assets were down substantially, but nothing was in capitulation mode where people were throwing it out the window with regard to value. So I think that's skewing a lot of people's idea of where we are. Are we going? We could all speculate and say, hey, did the Fed and the banks keep some type of artificial floor under the market and whatnot? We could all sit here and speculate all day, but nobody knows. But I think that's a really interesting thing because we're not getting the readings really in any asset that would indicate that we have a clear-cut bottom, unlike recent past, where every bear market we had was, again, in retrospect for some people able to see it while it's happening. But, you had clear-cut indications that everything was being thrown out the window with regard to value, and we're just not seeing that now. And I think that's the cause for a lot of confusion for a lot of people. And one more last point I wanted to address that you said, the pivot. Usually, so in a historic cycle, we go up as rates are rising, and when they pivot, we head down again. I actually think the same thing's going to happen. I think there's a chance that we keep rising into these interest rates by the Fed, and then when they actually pivot, I think that's when they're going to be an indication that the bad times are really here, and that they went too far, and then we're going to crash and burn from that point. But we'll see. But thank you for your insight. I appreciate it.
I do have a couple comments on that, and actually, I would like to ask you a question before you go. One potential, and I think you're probably right. I think like there's a good chance that after they cut, like risk assets could go down. But I was also wondering, like, what are your thoughts? I know I'm the person being asked questions, but I want to ask you a couple.
Yeah, sure. Thanks.
Normally the Fed is raising rates. They start raising rates into a strong economy. And as you said, right, like stocks normally go up when the Fed's raising rates, but this time that wasn't actually true. I mean, they didn't start raising rates until stocks were already going down. So this sort of cycle by the Fed, the interest rate hiking cycle is kind of different than what I mean. Normally, if you go back to say the .com era, if you go back to the financial crisis, even if you go back just a few years ago, the Fed was raising rates when the economy was strong, like in 2017. Like the economy, at least the stock market was strong.
Yep.
But this time, that's not the case. That's not been the case. I mean, yes, assets have rallied since October, but so I mean, the first interest rate hike was last March, and markets were trending down during that entire time. I would like to put forth a potential idea that the market is treating the transition from 75 basis points to 50 basis points back in October. I'm putting forth the idea, and I've said this on my channel a couple times, that the market is maybe treating that as the pivot, going from 75 to 20 to 75 to 50, because that's when assets started to rally. And I'm curious if the pause is going to be more so treated as the cut in terms of how assets normally behave. And I know it sounds kind of crazy, but the one thing that we know when we look back at history is that when the economy starts to look like it is right now, the Fed has already started cutting rates, right? I mean, you know, financial crisis.com, every instance in history, basically, even in the 70s and the 40s, when the economy starts going to crap, what happens? The Fed starts cutting, and but now we're stuck with this like potential higher for longer narrative. So I am curious if the Fed gives us one more 25 basis point rate hike and then pauses, I almost wonder if the markets are going to say, "Oh crap, now how long do we have to wait before they're actually going to cut?" Because if you go look at the CME future, if you go look at CME, it's showing that the market thinks the Fed's going to cut in September, you know? But what happens if they don't? What happens if the market just continues to be way too optimistic. Um, and then we basically just end up waiting. We beg and beg and beg the Fed to pivot, and then they just don't pivot. So one question I would have is, do you think there's a chance that this cycle could sort of be changed up from what we've seen previously, just because the Fed started hiking when the market was going down? And then the second question I have for you is, do you think, because I think you said you lived through the .com crash, right?
Yeah,
I
well,
think,
I was like 19, 20 years old, but yes, I saw it happen. I watched the market every day.
yeah, yeah. So I'm curious because I didn't experience that at all, but I look at the chart and I'm like, gosh, it was a 2.5 year bear market, right?
Mhm.
It was brutal,
It
and
was brutal.
yeah,
It
I
was
look at,
brutal, grinding, brutal.
but were people, like, was it similar to today? Because today it seems like everyone's either very bullish or everyone's very bearish, and I
No, no,
think,
no. It was brutal. When I say brutal, like there was no action whatsoever. Like there was no stocks. Yeah, there was a couple. When we had the rallies, they were very, very steep and quick, and then they headed back. Then they grinded back down. And then we'd have a capitulatory bottom where the VIX hit like 50 or so, and we did that like 4 or 5 times during the whole cycle. And the day we bottomed was when we dropped bombs on Iraq, Operation Shock and Awe. That was the day we bottomed.
okay, so it
Yeah,
was
but it was
more it
definitely
was
different
more
from today.
so
It's not even similar. I think that if we
so more
go
people
back
are probably,
into a bear market and continue to go down, then it could be similar because there'll be a drawn out bear market. If you notice, most of the bear markets we've had in recent history have been kind of very short-lived. Like 2008 was only like what about a year, even though it was not even a year. I think it was 2008, and then it was up till 2009, so it's like a year and a half. But they are getting quicker, in my opinion, the bear markets, as far as how they're usually quick and violent now, as opposed to drawn out like 2003, which was 3 years. So what was the main part of your question now?
the question was, I mean, I think you sort of answered. I was just more so curious because, again, it seems like today everyone is either very much in either the bull camp or the bear camp, and I was curious back in the .com crash if there was similar arguments between the bulls and the bears, or if more so everyone was just fairly bearish.
No, everyone was just bearish back then, really,
Okay.
and same thing in 2008. Like everyone thinks that 2008 wasn't real. The only thing that was surprising about 2008 was that people were surprised. I mean, well, yeah, I mean, the end part was surprising. Once we hit September of 2008, when the floor started falling out, that was the shocking part. But everyone was extremely negative throughout the whole way. There was no bullishness whatsoever, not even a creak of it. The only thing that was bullish at the time was oil and oil refiners, if I recall correctly. And then, and I think, one of the things you said, and then we'll give it back to the host. But one of the things you said that you kept bringing up is you really can't find anything in history to hang our hats on right now. And I think that's really because we can't compare this to anything in history. That's because in 2020, the Fed, they gave us unlimited liquidity. We had money, trillions and trillions of dollars flowing from the Fed, flowing from the government. So, and a lot of that money's still out there. And so I think that is why the whole environment is skewed. And I understand there's some people that have the argument that we're going to go into a crack up boom, and I could totally see it. I'm not against that view at all. But I think the reason why we can't compare this cycle to any other cycle is because it's not like any other cycle, in my opinion.
Yeah, I think you're right. I mean, I think you're right. I mean, there's just a lot of liquidity still out there. So despite the Fed's best efforts to to sort of rein that back in, there's just so much liquidity moving around, and it's led to a very choppy market where I think both the bulls and the bears are getting frustrated.
Yep, definitely.
Well, that was some pretty good.
Robbie, what do you got?
That was some pretty good conversation between the two of you. I was actually gonna go towards a more fundamental approach, but I know we have Will's outlook, and I feel that Will, being a new addition to the team, does deserve some sort of interaction with what's going on, and I'm sure that he has some viewpoints that he'd like to throw your way, Ben. So, and also we also have Snorlax, and if you guys are new to the space, we're having a discussion with Ben Cowen from Into the Cryptoverse, and we're just talking shop, catching up with him, and sort of knowing his insights and comparing this market trend with previous market trends and all things of the like. And up on the nest, guys, if you want to check out some of Ben's work, some cool charts and also some videos and some stuff from his brand Into the Cryptoverse, feel free to check that out. And yeah, thank you guys so much for taking the time to listen to us discuss. So, Will, man, I want to welcome you up to the stage, man. Thank you so much for coming up. What do you have for us, brother? How are you feeling?
Hey, how's it going? I hope everybody's doing well. I mean, I think it's a great conversation. I'm actually a little bit shocked. I thought Ben might be closer to my age, but apparently he's younger. And Michael might just be a little bit older than me, just based on the conversation. I picked up those few things. Um, yeah, I was kind of around during the .com, not quite about the age of Michael, but I was around for that too. I was around for 08, 09. Watched the downturn from the poverty level, and yeah, it wasn't great. I can tell you just based on the conversation, like Ben, I think you have a really good head on your shoulders, especially if you're younger than me. That's really crazy. Um, as far as understanding, what's going on and looking at things from outside as opposed to like trying to follow the crowd. I think a lot of people are just so insistent on following the crowd. I think there was a lot of great points with liquidity and everything else. There's some liquidity, some froth left in the market. I believe so too. I think some of that money's still floating around. Um, I wanted to kind of talk about a few points that you guys discussed, and typically, one was the cut, right? And one point that I wanted to get to was the one that Ben made, was basically where Ben had said, well, maybe they treat the pause as the pivot, right? And they drop. And that's a real, I never thought about that perspective. I think that's a really great approach to potentially, keep an eye on. And another thing too that I wanted to kind of get to is like the Fed's never gotten to their 2% target without something breaking. And if anybody can refute that, I'm all ears. But from what I've seen, it's never been a situation that's occurred. Um, Typically, something snapped, the market crashes, the Fed pivots on the crash, and it's not necessarily the market crashing because of the pivot, but it's more the market itself reacting to the break before the pivot. And that's really something like I'd like your guys' insight in that perspective, as far as like what your thoughts are maybe on that point. As well as I completely agree on the part with the market being too frothy. I just throw this out there too, with what Ben said. As long as you remain below that 50% market or mark for a dominance for BTC, I think there's a lot of stuff that's got to get washed out. A lot of scams still sitting in crypto that need to be kind of washed out and taken out, and that's where that dominance comes into play. That dominance shows that the market is healthier and the market is cleaned up, right? And that's what these bear markets do. They clean up the market. So I think that's something that people should really take into better consideration. I see people all the time, they troll you all the time on it, Ben, but I'm completely in your court on the dominance factor, just based on what's out there and what exists in the altcoin market.
Yeah, and I mean, as far as the dominance goes, I know people are hopeful that, especially if they're altcoin heavy, that they're hopeful that this time is different and that the altcoin market is better than it was. And I'm not saying that it's not, but I also think Bitcoin has gone so much further along its adoption curve as well. So to compare the altcoin market to where Bitcoin was in, say, 2017 is not true, right? Like, compare it to Bitcoin's reach today. Don't compare it to where it was in 2017. And also with regards to the dominance, I mean, it didn't go lower than where it was in 2017, 2018. Despite all the VC money and everything, despite all the money printing, the dominance still stayed above its 2018 low. And so, yeah, I know, people give me people give me a really hard time about it, but I will say, like, the only reason I have these opinions to some degree is because I used to be that person who would think that, like, there's no way it's going to go back up. Like, I used to be that person, so I can also kind of understand where these people are coming from, because I used to be them. And oftentimes I would say that it takes a cycle in crypto to sort of learn it for yourself. Sometimes it doesn't really matter what someone says until you live through it. You're not going to change your mind on it. But yeah, so I'm trying to remember all your questions. I mean, so you talked about liquidity. I definitely agree. There's a lot of excess still out there, and the Fed will likely just continue their QT and raising interest rates, or at least keeping them higher for longer until some of this excess has been removed. As far as I'm trying to, was there another question
Yeah.
specifically?
So the main point, and maybe you and Michael can both kind of give me your opinions on it. Has there ever been a historical point where the Fed has typically pivoted before something is broken in the market?
Normally, I mean, maybe he would be a better person to ask. But I mean, when I look back at periods of high inflation, um, the only real thing that brought them back down was an outright recession, right? Like recessions suck because people lose their jobs, but they're great for getting inflation back down because they absolutely kill demand. So I, I think you're probably right. I mean, I think in general they will hike or they will hold rates high until they break something, because how can they not? And that's the thing that I keep wrestling with in my head. I look at what the markets are pricing in. The markets are calling for rate cuts in September. And I think to myself, what would have to happen between now and September for the Fed to actually cut? Nothing good, right? Like there's nothing good that could happen between now and September that would make the Fed want to cut. So if the market is right and the Fed cuts in September, it's because the S&P has absolutely capitulated. You know, the Fed's not going to the Fed's not going to cut rates if inflation is still 5%. They're just simply not going to. So I think you're right. I mean, I think I mean, I know you have a question. I think specifically they will raise, um, or at least go higher for longer until they break something. That is what they historically have done. I'm not sure. I mean, there could always be a specific instance in history where that's not exactly the case. If you look at some of the periods like in the 70s, interest rates were all over the place. Like they would go up and down quite frequently. I mean, it sort of showed that they were really wrestling with trying to get inflation back down. And even when Volcker was in, I mean, he had to send us into two recessions, basically back to back, to get inflation back down. And one of the issues with that Powell has reiterated several times is he does not want to make the same mistakes that they made in the 70s. And those mistakes were basically pivoting too soon. Because what happens if they pivot too soon? Then then all the demand comes back, inflation goes back up, and then we have to repeat this process 2 or 3 years from now. And if you look at the 70s, what if you look at basically, I think from like 68 until 81, the market just went sideways. It was actually for like 15 years. The S&P went sideways for essentially 15 years. It was slightly higher highs and slightly lower lows. And it was basically because the Fed could not get inflation back down, because they kept pivoting, because something somewhere was probably breaking, and they pivoted, but inflation just came right back. So um, I think the market is probably a little too optimistic on the next on the timing of the next rate cuts. But I don't know. Maybe was it Michael? Maybe he has a more specific and concrete example of if the Fed has ever cut before they broke something.
Yes. So, yeah, I mean, I've always, back in 2020 or 20, whatever, I mean, just in the last year, I've been saying that the Fed doesn't stop cutting until they break things. Will this time be different? It would be an anomaly. And another unpopular opinion that I have, well, the first one's not really unpopular, but this one is, I think rates should stay higher for as long as possible. And I think they will. I think they're going to stay higher for longer than a lot of people think. And I think that's a very healthy thing. I actually had a really enlightening conversation with somebody a couple of weeks ago. And if you noticed, after the iPhone came out in 2010, we really haven't seen much innovation. I mean, what do we have? We have DoorDash, Uber, nothing to hang our hats on that is exciting in any way, shape, or form. And someone mentioned to me it was because interest rates have been so low and people were just rent seeking instead of actually innovating. So I'm a big fan of them keeping rates up here for as long as they possibly can. And you and I both know they're gonna only do that until they break something. But if you look around right now, there's a lot of money still flowing around. I know there's certain classes of people being hurt, and so we can't deny that there's there's pain out there. But when I go out, I see people spending money on expensive items. They're still going to restaurants that are charging $9, $10 for a slice of pizza. They're buying 5, 6 drinks. So the money is still being spent. And then as far as what you said, no, I don't think the Fed. I think the Fed will eventually break something. It's just going to be a matter of when. It would be really shocking if they didn't. And I think you said, and as far as the overall macro environment goes, they're not going to cut rates with unemployment where it is, and there's a whole bunch. There's a lot of pockets of strength which indicate that they're not going to cut rates anytime soon. I think September is absolute BS. I'm not an economics guy. I'm not a bond guy, so take that with a grain of salt. But I don't believe that will happen, and I don't think it should happen either. I think rates should be up here for another year or two if possible. And your last point about one thing that you mentioned as well is Bitcoin dominance. I don't think the crypto market's going to clean up and Bitcoin's going to get truly dominant until regulation comes into space. I mean, you see what's going on with the meme coins right now. Anyone with a little bit of programming knowledge can go and start a coin on one of these dexes and people will chase it. And that's just the way it is. And that's the way it's going to be for a while until it actually gets some form of regulation in here, because Bitcoin, even if it 10, 20 times from here, is not really going to make someone who is not rich already rich. So there's always going to be those people looking for the next 100, 1,000 times. So until we actually get some regulation in the space, I don't really see Bitcoin dominance coming back in a huge way, because a lot of participants in the crypto market have moved away from Bitcoin as the main asset. Whether that is a mistake on their part, I don't know. But I don't think that it's going to come back in a really big way until the market gets cleaned up and people have no choice but to put their money into assets like Bitcoin. So yeah, my final say on all that is yes, I haven't seen a case where the Fed hasn't broke something. We thought that was going to happen in March. It almost did with the banking crisis. But I got to, depending on how you look at it, some people hated it, some people loved it. But I will say that if they were going to do it, they did it the right way. They didn't waste any time. They alleviated everyone's fears right there and then, and they didn't give a chance for contagion to happen. So I'm not a fan of bank bailouts, but I think they did a good job. If they were going to do it, I think they did. I think they did they did a good job in that.
I agree, Michael. I think also to kind of add to your point, I think their intention is to show strength in the banking sector, and if a company goes under, like another Enron or whatever, that company will fail. I don't think that they will bail that company out. I think they will let it fall. I think they're just trying to keep the banking sector itself, afloat until all this can blow over at the end of the day. Just my perspective. I also want to bring up too, because I know we talked about the '70s. Just for people a little bit of history lesson. The gold standard was removed in 1971, so the market back then was significantly different than what it was from '00 and '08, because we were still kind of finding our way into creating the petrodollar, essentially, right? And that's where we've been for a long time. A lot of people call it the dollar, but it's really the petrodollar. It's been a dollar based on oil prices versus based on dollars.
I want to comment on this because I want to see how, Michael, what you think about it, because you named something about the innovations that haven't happened. However, I'm a big nerd on the gig economy. And so a lot of people tell me it's unemployment would determine. We had 2 negative GDPs last year, but no unemployment rise. DoorDash and Uber created this new economy, the gig economy, along with stuff we do. People getting paid to play video games, people getting paid to make videos of a person playing the video game. And so the research I'm showing shows about 20-30% participate in the gig economy. And I think this is why you don't see unemployment ticking down. If anything, there's still a labor shortage, right? That's a huge thing we're dealing with. So I've always been of the opinion that even though the Fed is raising rates, a lot of people, I think, expect the unemployment to be much higher by now. If unemployment is the target, I do consider the new innovations of Uber and DoorDash, while they weren't innovative tech-wise, they created a new landscape for workers. And I'm just trying to see,
That's a
does
good point.
unemployment have to tick up for this break? Because if that's the case, I think this could take a lot longer than people realize.
Yeah, I mean, it's a new world, right? I mean, you look around, we have the internet economy, which really hasn't seen a recession. If you look at it, I mean, those guys are still crushing. I don't think there has been even a sniff of a recession in the internet economy. As far as I'm not in, I'm not exactly in it, so I can't speak for these people. But maybe something like drop shipping dropped off, but there's still money being made in that area. But yeah, it's an interesting point you made. There may have not been innovation tech wise, but the way we work has been completely revolutionized and will continue to do so. So, I mean, is that reflective? You got to remember, half the workforce allegedly isn't working, or something like 30-40% of the workforce. So, are those people? Are they doing stuff on their own? It's very likely some of them aren't, and some people are just lazy and not doing anything. So, and that's probably like 20, maybe like 20% or so. But I would say the other people that are considered underemployed or unemployed are probably doing various hustles that we're speaking about in here. So yeah, that was a great point. There was innovation in that regards, and I think that we're going to see a continued decentralization of the workforce. I think among the young people, they don't want to work for corporations anymore. They don't feel that there is loyalty. The 9 to 5 has lost its luster. So I think entrepreneurship and just things like people doing the gig economy, like you mentioned, I think it's going to be extremely popular. So yeah, I definitely agree on that end.
And I do think it could tick up eventually. Like, it makes me think it tick a lot longer. I honestly think AI and automation is a bigger threat to jobs than the Fed is right now. That's just where I'm at.
Yeah, AI is a whole nother can of worms that I don't want to even open up in the chat because we'll get far up the discussion. But yeah, that's going to be a doozy.
If you look at continued claims and initial claims, they tend to lead the unemployment rate, and both of those are in the process of heading higher. So I mean, I think there is some elements of, like, the unemployment rate is very, very stubborn, and it doesn't want to move higher. And I think you bring up some great points. There is a labor shortage in some sectors. Like, that's a fact. I talked to people. I was speaking to some people yesterday who were saying that they were having trouble hiring because they can't find people that want to work. I think there could be some elements of the recession, or a theoretical, right? A recession could hit some sectors harder than others, right? Like, so you might see, some types of workers out of a job, but other types of work are still in really high demand. So we also have to remember too, even in 2008, there were articles about how people thought that the unemployment rate would never go up because there was a labor shortage, and um, and then it did, right? It went up a lot, and I think there's some element of the unemployment rate is the last thing to move, right? Like, it's in the business cycle, like, that's the last thing to finally make its move. And I think, and again, I don't really speak from experience, because I mean, other than the quick thing that happened in 2020, I haven't really lived through um, anything like this. I just look at history, and I can see that initial claims, continued claims, they all lead the unemployment rate. The unemployment rate is typically very low just before the recession hits, and then it can go up quickly. And I think the other thing too is we have to remember that when the unemployment rate does start to go up, I mean, whether it happens this year, whether it happens next year, right? Who really knows? And I think you're right. I think that AI could offer, or could be a big threat to jobs over the next, like, 5 to 10 years. That could be a much larger threat than I think than potentially the Fed. But one thing to consider as well with the unemployment rate is, once it finally starts to move up, a pivot by the Fed is not going to stop it from continuing to go higher. Normally the stock market bottoms before the unemployment rate peaks, because the stock market's forward looking, but the Federal Reserve is not forward looking. They're a reactionary body, and if they're going to keep raising rates, and if they're going to keep them higher for longer, then they're going to do that until the unemployment rate goes up, whether it's next month, 6 months from now, 12 months from now. And when it starts to go up and they pivot, it just in the same way that it takes, what, 6 to 12 months to potentially feel the effects of rate hikes. It can take 6 to 12 months for the economy to really benefit from rate cuts as well. And that's often why, going back to one of the things we talked about earlier on in the conversation, and that's why a lot of times you'll see risk assets sell off even after a pivot, is because, by the time the Fed pivots, the market doesn't really care that much about what the Fed, I mean, it's like, all right, great, you already broke something, congratulations, but these rate cuts are not going to help the economy in the next 2 months. Maybe things will be better a year from now, but it's not going to immediately help. So yeah, I think what you said is true. The unemployment rate is very low. There is a labor shortage for sure. But I've also, looking at the charts, I can at least see in history that things can change very quickly. And then one other thing that I've thought about that could impact the unemployment rate is, for a very long time now, student loans have basically been on pause. And people that are coming out of college are not necessarily as incentivized as they have been to find work to pay off their student loans, because they haven't had to pay them off. They've just been sitting there, and they haven't had to go pay these student loans off. So I think there is some risk of a lot of young people potentially coming out of college, and maybe in their early 20s, that potentially have to start paying on their student loans soon, and that could lead to a surge of new people coming back into the workforce.
Yeah,
Some great
definitely.
discussion. Some great discussion going on here, guys. We've had a couple of new people come up on the panel, like Sefi, and great to have Premise and Will also join us. And Michael, you've been such a great value add to these spaces. So shout out to you as well, brother, and also Ben for joining us. So I want to remind everyone, my name's Wabi. I host spaces like these throughout the week, and if you guys are enjoying this conversation, feel free to follow us here because Bitcoin, and also Ben. Ben's an individual that's been into crypto for a number of years now, and is a very, very well diverse individual as far as all things markets, really, with a very special touch into all things cryptocurrency. So I want to thank you guys once again for tuning into this discussion, and I'll pass it over to Will, and then we'll go on over to Sefi, who's been another great addition to these spaces. And what a magnificent conversation for this beautiful Friday. I want to thank all of you guys for giving such value to the audience here today. Go ahead, Will.
I just want to elaborate on a couple things too. So this was something I wanted to state earlier, but kind of forgot about it. But I know people view like a lot of people view this time as different. And one of those points that you made there too, Ben, was that this time the Fed started raising rates while the market was already dumping, and really I sit back and I think on that, and this is something I've been thinking on for a while, and I think people should maybe come to the thought process that maybe the Fed was just late, right? Maybe the market was forward thinking, and the market had already saw the writing on the wall with the frothiness, and the market started pricing in those rate hikes before the Fed basically got an opportunity to react to the situation. Uh, I wanted to kind of toss that out there as far as like kind of like a thought process, and kind of get your input on that, and what your thoughts are on that.
Are you asking me?
Yeah, yeah.
Um, yeah, no, I mean, I think the market is very forward looking. Like, at least 6 months ahead. I think you could say the market is looking ahead. So yes, I think the market was pricing in those rate hikes. What I don't think the market is priced in yet is a recession, right? So like I think there's the pricing and the rate hikes, but it still remains to be seen if we're going to go into a recession or not, right? And we have bulls saying that there's not going to be one. We have bears saying that there's definitely going to be one, and it's just led to this huge tug of war where the S&P has essentially gone sideways for half a year now. I mean, we haven't really gone anywhere. But yeah, I mean, I think you're right. I do think the market is in fact forward looking, and that's why I was also sort of toying with the idea earlier about was the market treating the transition from 75 to 50 as the pivot? Um, and going back to Bitcoin, by the way, if you look at where it bottomed in 2018, the bottom for Bitcoin corresponded to the Fed pivot, right? Like exactly where the Fed pivoted in 2018, that's when Bitcoin bottomed. So we have to ask ourselves now, the Fed hasn't pivoted yet, right? I mean, they haven't, not in traditional terms. Um, Normally, the stock market doesn't find some type of bottom until the Fed pivots. So I was just sort of thinking, like, did the market treat the transition from 75 to 50 as the pivot? And by the way, with regards to Bitcoin, And by the way, when I say pivot, I mean the pause. So back then it was when I'm referring to when they paused. So Bitcoin bottomed when the Fed paused, and then when the Fed paused throughout basically the first half of 2019, Bitcoin rallied during the pause, and then Bitcoin started going back down right around the time that the Fed started cutting again. Right. So this time it almost seems like we're one step ahead, right? So Bitcoin rallied after the transition from 75 to 50. And then I'm curious because we are potentially approaching a pause, right? Like the next rate hike, if we get one more, like that could be the last one. I mean, maybe there's going to be one more after that, but the next one could be the last one. And if that's the case, then there's an argument to be made that maybe Bitcoin just bleeds until the Fed cuts. And you know, if it did that, it would be a very similar price action as 2019, like very similar as 2019. Just the Fed was so far behind the curve that the market priced in what they were doing before they did it, just because the market again is forward looking and the Federal Reserve is not.
Ben, I've got a question for you in regards to global net liquidity and the M2 money supply. Obviously, just if you overlay a Bitcoin chart with global net liquidity or even domestic net liquidity and also M2 money supply, you'll see that there is definitely a correlation between the two of them. Do you think it's possible for Bitcoin to thrive in an environment where liquidity is constrained on a global scale and also the M2 money supply is moving down, or is it correlated to a point where they have to be moving in tandem for Bitcoin to thrive?
So I was actually the next video I think I put out on my channel is actually going to be about the global net liquidity. I talked a little bit about it on a live show yesterday on my channel, but sort of summarize some of the stuff. Like so global net. If you look at global net liquidity, so you're essentially including a lot of different countries, and obviously it's just going to be an approximation. You're not going to look at every single country, but if you look at say global net liquidity of Japan, China, you know, the United States and various places in Europe, what you'll see is that the S&P has tracked global net liquidity almost perfectly since the pandemic, right? So since the pandemic started, the S&P has almost identically tracked global net liquidity. And it's interesting because what it seems to me that's going on is the United States, like the West, is trying to remove liquidity, but you have the East, you know, China, and Japan and some other places, right? They've been adding liquidity. Now, I think Japan's balance sheet did decrease last month for the first time in a while, if I'm not mistaken. But global net liquidity, at least right now, it bottomed in like in the third quarter of last year, and we also know that that's when the S&P bottomed as well. Since then, global net liquidity has basically, it almost looks like it's putting in a potential topping process, but it still remains to be seen. There are some big headwinds for global net liquidity as we get into the back half of the year. We have the Treasury General account, which needs to be refilled um, at some point. And of course, there's the debt ceiling stuff. But we also have the Fed, you know, draining 90 billion a month. And this is going to continue to provide a headwind for global net liquidity as well. And so, you know, to get to your question, right, if you look at Bitcoin divided by M2, you learn a lot. And just in the same way, you learn a lot if you look at the S&P divided by M2. The S&P divided by M2 basically has gone sideways for over 20 years. It hasn't really moved. So then I always come back to this idea that asset prices aren't always going up because fundamentally the asset is better. I mean, obviously there's some truth to the assets becoming better, but there's also some truth to the idea that asset prices are going up just because there's more dollars in existence, and the more dollars there are, the more, you know, we're just going to put those to risk assets, right? Like we only need a certain amount of dollars to live off of. So beyond that, we're going to want to invest in something. Um, and so it leads to the inflation of asset prices. Now, regards to M2, there are only a few times in history where M2 year over year growth has gone down. And we're in a period right now where it is significant in terms of the drawdown that the money supply has had. And I don't think we've seen something like this in decades. And the last time it happened, you know, markets, it was not it was not good for risk assets. Now the counterpoint to that is that the M2 money supply, it's coming down, but you could argue that it's just coming back to trend. Like, I mean, the trend from like the last decade before March of 2020 was a fairly well defined trend, and so we're just trying to come back to the general trend, I think. So I don't really see the money supply going down right now as like the harbinger of doom, right? Like I don't think that it necessarily means that we're heading into a depression or something like that. I think that we're more likely just going back to the trend that we were already on. But in that process, it is a headwind for risk assets if money is being removed from the system. I sort of I sort of treat it as like an analogy, right? Like imagine we're all investors and we're standing around a pool, and the Fed, and there's liquidity, right? There's water in the pool, and the Fed just pulled the drain out from the bottom, right? So liquidity is draining from the pool, right? Liquidity is leaving the system. Now the S&P goes down. It doesn't mean that if it goes down a certain amount, we're investors, we're sitting above the pool, and we all have a cup of water. We all have a cup of water, and when we think risk assets are fairly valued, or we think we're getting a good enough discount, people will throw their cup of water in, right? They'll throw their liquidity in. And if they do that, it can temporarily lead to asset prices going up. The issue is that the drain at the bottom of the pool is still unplugged, and the liquidity is still leaving the system. So if enough investors at a single time throw in their liquidity, you can see risk assets rally. Like we've seen risk assets rally because enough people thought they were getting a good value. Again, the issue is that the problem still isn't solved. And the Fed has not they haven't put the plug back in at the bottom of the pool. And the issue is normally when they do put the plug back in and they try to make things better, it's too late because now a crack is formed at the bottom of the pool and liquidity keeps, basically people are just throwing in the towel because they've broken something. So when I think about global net liquidity, I think about I think about this bear market in terms of like two cycles, right? I mean, like I don't know that the liquidity, the crunch and liquidity part has really happened yet. I think that it could still be ahead of us, um, and that could lead to sort of what Michael was talking about earlier in terms of like, he said that if you look back in the context of history, like in every prior bear market, you can point towards to a bottom that seems obvious, that seems like, all right, we can point to that as the reason. I think that we're still in this process of just figuring out how much liquidity is the Federal Reserve going to remove from the system, and market participants are very everyone's sort of has their own opinion, right, as to how far the Fed's going to go. And I'm in agreement with Michael on this. I think they're going to go further than most people think they are. I don't really think they care if the S&P is at 4,100 or 3,800. I mean, if the S&P is at 3,200, then maybe they care. But I don't really think they care if the S&P is around 4,000. I think they're going to keep doing what they're doing, to the dismay of investors, and eventually they'll plug the pull back up, and we'll start adding liquidity again. But so yeah, and also, by the way, with regards to what you said about the money supply, if you look at Bitcoin divided by M2, the summer lull, the pullback in the summer of 2021, it pulled back to the 2017 all-time high when accounting for M2. And this rally that Bitcoin is in right now rallied back up to the 2017 all-time high and the 2021 low when accounting for M2. So I think you have to take into account the money supply. I think it's an important thing to also take into account global net liquidity. If more dollars are coming in, we should expect asset prices in general to trend higher. If dollars are leaving, we should expect asset prices, I think, in general to trend lower. The main caveat is that it's not just dollars, right? There's also China, there's also Japan, and they've been adding liquidity for the last 6 months. I mean, I think Japan again have recently maybe lowered it a little bit, but they've been adding it, which has basically kept liquidity at very similar levels for essentially the last 6 months, which arguably has kept asset prices propped up for the last 6 months.
Hey, one thing I wanted to add to that. So Bitcoin, as you know, in my opinion, is highly, highly relevant upon money in the system. And in regards to the supply of money, I know a lot of people, like we all know that supply of money being cut, but like you mentioned, it's still a huge amount. It's still a very, very big amount. And we don't even know. I mean, I believe we had a very nice bull market in 2021, but in my opinion, Bitcoin should have been a lot higher. But I had a really important point I was trying to make, and it totally slipped my mind. But You know what? I'm going to stop there because it totally slipped my mind. But in essence, the liquidity is still very high. And that's what I wanted to say. Yeah, so I believe that this is pure speculation, but I believe the Fed may even be keeping a floor under the market so they could keep interest rates higher for a long time, maybe keeping it in a range as opposed to going straight down. And I agree with you, Ben, that if the market's at 41, 4,200, 3,800, even above 3,500, they will be in no rush to lower rates, nor should they be, in my opinion. They need to crush inflation. I'm not convinced that that is completely done yet. And, prices are high. We don't want prices to stay here. We want them to go lower. And that's not going to happen if they rush to raise interest rates. I'm a big fan of them keeping them up here for as long as possible.
I also think there was one other question that was asked, and I meant to answer it as well, because you asked specifically how Bitcoin would perform. The obvious answer, right, is if the money supply is going down, it's likely not going to be a good thing for risk assets, right? Like that's the obvious answer. There's also a more nuanced answer as well, that higher interest rates, like higher for longer, higher interest rates are likely going to drive money away from projects that provide no real value, like the meme coins and all the degen stuff, to things that actually do provide value. I think there's a lot of investors from 20 years ago that were value investors, right? You look to the price to earnings ratio, you look to all that sort of stuff to make investments. But for the last several years, I mean, when you have things trading at price to earnings of like 200 or something, it's just everything just seems like insane. I think that we could come into that as well, where maybe it's a headwind for Bitcoin, but I also think that it could lead some liquidity to go from the altcoin market back to Bitcoin, which could help Bitcoin stay higher than it otherwise would have. I mean, I'm not saying that Bitcoin won't go back down. I actually think that it will, but I'm saying I'm not really in the camp of thinking that it's going to crash to like $3,000 or something, because that was the March 2020 low or something, which I know has been talked about. I'm not of that opinion. I think that a lot of liquidity from the altcoin market can go back to Bitcoin, and that actually is what can that's ultimately where I see that the dominance heading higher, the liquidity flow from the altcoin market back to Bitcoin, and back to projects. I think that are, and I'm not saying that Bitcoin is the only relevant project. I'm not in that camp, but I do think it is the safest one, and it's the king of the cryptoverse. So yeah, money supply going down, probably not a great thing for Bitcoin. The counterpoint, of course, is that it might lead people to go away from projects that provide less value to more safer plays.
I wanted to add one more thing to that because you mentioned something important, but so another angle I see in the whole Bitcoin rise that I know people are taking consideration, but I don't hear it being spoken about much. I know for myself and my family, I know that I have bought gold and Bitcoin because I am losing confidence in the dollar. Times that by probably 3, 4, 5, 6, 7, 8, 10 million U.S. citizens. How many people across the world? I think a narrative that's not really being spoke about is how much money is moving into Bitcoin as a hedge against, the possibility of waking. And again, I'm not one of these people that think the USA is in some type of. We have our issues, but in my opinion, we are still far above the fray in many aspects, and we have a lot of resources to make up for all our deficiencies if it ever came down to it. We just lack leadership, in my opinion. But there is the scare out there. There is the narrative out there that the dollar is losing supremacy and that we could wake up one day and all of a sudden milk is $12 a gallon. So I believe that will keep also, just from a psychological perspective, that will keep a floor under Bitcoin for the foreseeable future.
That's a really great point, Michael. And one thing I wanted to bring in regards to Bitcoin dominance and all the froth that we continually see from this excess liquidity that's still being recirculated from altcoin casino to altcoin casino, even in these potential pre-recessionary conditions. But there's no better, more surefire way to irk people than to tell them that the ETH BTC pair is going to bleed potentially down to levels that we haven't seen since, at a minimum, maybe summer of 2022, or in my opinion, potentially even like early 2021. There's a big line in the sand that I have drawn on my ETH BTC pair, which is 0.04. And a lot of people seem to forget that, right on like the cusp, right on the inception of the last bull market, ETH BTC bled down to sub 0.02 and then went on a crazy run, obviously peaking at like 0.088. Ben, how likely do you think it is that ETH can sort of maintain and just sort of range at these elevated levels, or are you in the camp that Bitcoin, like previous cycles, will lead off of the bottom, and it's probably best and healthier for Ethereum in the long run that it does bleed substantially into Bitcoin over the next year or two?
Oh, I mean, I've made my view clear on this on my YouTube channel 1,000 times, and I get flack for it constantly. But yeah, I mean, no, I don't think Ethereum's holding these Bitcoin valuations at all. Um, and like and people give me a hard time for it, but again, if you go to my YouTube channel, the very first video on my channel is when the Ethereum Bitcoin valuation was 0.02. And I said that it was severely undervalued and that was likely going to trend up for the next several years. And I flipped my stance back in 2022. I said, all right, guys, we had our chance to go back to point one. It didn't happen. And now it's time to put on our Bitcoin maxi hat and say, look, it didn't happen. And altcoins are going to bleed against Bitcoin for the next, 1 to 2 years. Historically, 18 to 24 months is what you would normally see. And no, so I think that the Ethereum Bitcoin valuation is going to get absolutely crushed for the next several months. And every time it pumps up at all, people give me a hard time about it. But again, look at it. I mean, it's just been putting in lower highs since the merge. And really, the merge was a lower high compared to December of 2021. And by the way, December 2021 was a lower high compared to January 2018. And by the way, January 18 was a lower high compared to June of 2017. Ethereum Bitcoin has been putting in lower highs. It's an inconvenient truth that a lot of people don't want to accept because they want to believe in the idea that it's going to flip Bitcoin this year. But Ethereum Bitcoin has been putting in lower highs. Now, the counterpoint to that is that it's also been putting in higher lows. Okay, so it put in a low at 0.002 back in 2015, and then it put in another one at like 0.008 in 2017, and then in August of 2019 and later 2019 it was like 0.017, 0.02, somewhere around that area. So I'm in the camp that thinks that whether you think that Ethereum Bitcoin is in an uptrend, if you think it's going to eventually flip Bitcoin, or if you think that it's an oscillator, I still think either scenario in the short term it's going down. Okay, so I think you're right. I think the likely direction for it this year is somewhere between 0.03 to 0.04. That's where I think the Ethereum Bitcoin valuation is going, and then at those levels, I think I'd actually be interested in Ethereum as as a potential addition to my portfolio, because for the last 15 months my crypto portfolio has basically just been Bitcoin. I mean, and I've just stacking cash as well. But I mean, I've consolidated essentially the entirety of my crypto portfolio back to Bitcoin a long time ago. At least what I wasn't willing to sell out to just U.S. dollars, because I think that most everything is bleeding against Bitcoin. Not only Ethereum, but also most every other single altcoin. And most of these altcoins are down 70-80% against Bitcoin, which is also down 50% on the US dollar. So it shows you just how badly the altcoins have gotten crushed. Furthermore, if you assume the bottom is in for Bitcoin USD, so what, right? I mean, a lot of the altcoins still went lower in 2019 and 2020, right? Cardano went lower, XRP went lower, even your DGEM plays like Dogecoin went lower in 2019 and 2020, even though Bitcoin USD did not. So yeah, I think that the Ethereum Bitcoin valuation will likely go back down to 0.03 to 0.04, and when it does, that might mark the bottom for ETH on its USD pair. That might mark the bottom. Is my thinking. And then the only thing I'm somewhat unsure, and by the way, I mean, I could be completely wrong about this, right? So let me not get the impression that I'm 100% confident. This is just, we have to take views on certain things, right? We have to make our portfolios a certain way. And I think that Bitcoin is set to outperform Ethereum for a while now. And so I think that you will likely see the Ethereum Bitcoin valuation fall back down to that 0.03 to 0.04 level. And at that level, I think then the real debate begins. Okay, is the Ethereum Bitcoin valuation on a trajectory? What's more powerful? Is it the higher lows or is it the lower highs? And I don't really think we're going to find that answer out until 2026. To be completely honest, I think it might take until 2026 to be fully sure. But once it's at that 0.03 to 0.04 range, I think you're getting value for it. Like I think you're getting relatively good value. It doesn't mean that it can't go to 0.02. If it goes to 0.02, then it just means it's an oscillator, right? And there's a case to be made that it could be an oscillator. The other thing that I think people should look at more so than the Ethereum Bitcoin valuation is the Ethereum market cap divided by the Bitcoin market cap. Because remember, the supply is not, the supply changes. And if you're interested in the idea of the flipping and whatnot, you should be looking at the market cap valuations. And what you'll see is that it ebbs and flows, right? It goes from from the lows to the highs, and the lows to the highs, and right now it's at the highs. So I'd put forth the idea that the Ethereum Bitcoin valuation will likely bleed to 0.03 to 0.04. That could be as low as it goes, right? I can see that could be as low as it goes. I think I'm a buyer of Ethereum when it gets down to those levels, and if it goes lower, by the way, if it goes lower than 0.03, I don't think it's because the USD pair is capitulating. I think it's likely because Bitcoin is just outperforming it in the early stages of a bull market.
That's a really great point, Ben. And actually, that would be kind of a dream scenario, in my opinion, where we could almost repeat what happened in late 2019, where BTC against the US dollar pair and also ETH against its US dollar pair are both moving up while the ETH BTC pair is bleeding at sub 0.04. And then we can hit that same rotation selling Bitcoin into ETH for another potential leg up. But I do see we've got Tommy with his hand up and also Sefi. So let's go to Tommy and get a thought from him and then go to Sefi.
Hey guys, hey Ben, really appreciate you for coming on today. Yeah, the conversation of liquidity and it receding, right? I mean, it is continually receding. It's really the main reason why I've been bearish on the relative outperformance of altcoins against Bitcoin all year. And I am one of those people that looks at capital rotations between these assets very quickly because I feel like it's a great indicator, like you said, of froth, of whether we're having a risk on dynamic or not. But when I look at Bitcoin dominance and ETH Bitcoin right now, yes, I am continually bearish on where I believe alts are headed relative to Bitcoin. And my assumption is that eventually Bitcoin dominance is going to break out. ETH Bitcoin probably breaks down in confluence with that, but it almost feels like, given how long it's gone sideways, we're reaching a point where you could argue that at least over the last 2 years, we've reached a very clearly defined level of fair value, or I guess in this instance, kind of balance between froth and Bitcoin. So my question for you, Ben, is, what do you think drives these range breakouts or breakdowns from here? Because I don't know. I'm kind of curious about what the dynamic to push it higher will be. Obviously, I agree with you that Bitcoin will likely outperform substantially in the beginning of the cycle. But what do you think kind of drives that initial outperformance and creates these breakouts?
Yeah, so I think the reason I think Ethereum Bitcoin valuation is going down is, well, first of all, if you just look at the chart, it looks like just a massive distribution phase, not that dissimilar from what we saw back in 2017, 2018. But that's not a fundamental reason, right? That's just the chart reason. The fundamental reason, I think, is, I think that the merge had a big effect. I think that and by the way, I mean, I did not anticipate. So back in May of 2022, I essentially sold most of my, like, basically almost all of my, not all of it, but a lot of my Ethereum back to Bitcoin at around 0.075 on the Ethereum Bitcoin valuation. And then it immediately plummeted, like right after I sold it, to like 0.049. And I felt like a genius. I was like, all right, I felt like a genius. And then I think I got a little bit. I think my head got a little too big because then it just rallied back up, right? Like it rallied back up to where I sold it from, and then it went slightly higher for a little bit, right? So it's kind of a reminder that the market is is very hard to predict, right? And even if you predict the initial movement, it doesn't mean that it's not gonna just sort of go back the other direction and humble you. I think that's one thing about bear markets is that they humble both the bulls and the bears, because even if you're bearish on a certain valuation, the path to getting to that valuation is probably not the path that you think it is, you know? Um, so the fundamental, some of the fundamental reasons, I do think there is some element of all the Ethereum being locked up, or a lot of it being locked up. And I know the people that are vocal about it today are not going to concede that point. They're more likely just going to say, well, who's going to sell now, right? Like, why would anyone sell now? First of all, a lot of people locked up their Ethereum, their ETH, a long time ago. So the people that are vocal about what they're going to do now are probably not speaking for the people that bought, like, a while ago and left the cryptoverse and are just waiting for the first opportunity to sell their Ethereum, right? Like the people that are here now, of course, like, why would they sell it if they think it's going to go to 10K in a few years, right? They're probably not. But there are some people that are going to sell it, right? There are some people that will sell it. And one of the reasons that it's the same reason we sell anything. If you think the price is going to go lower, if you think that we're heading towards a recession, and you think that liquidity is drying up, then which asset is primed to sell off? Well, it's the one that is significantly overvalued with respect to Bitcoin. And I mean, look, I do like Ethereum from a fundamental point of view. I don't really think there's an ETH killer out there. I think Ethereum is a blue chip. I do. I think it is a blue chip in the cryptoverse. Bitcoin and Ethereum are the blue chips, but I still think it's relatively overvalued with respect to Bitcoin. And I think this sort of the slow unlocking of supply is going to put downward pressure on the price of Ethereum for months to come. And look, I mean, look at the last half of 2019. Ethereum dropped 70% in the second half of 2019. If you look at where Ethereum USD topped out, and then where it bled to after that, it dropped 70% from that level in 2019. I think a lot of people think, oh, well, everything in 2019 was just fine and we were all happy with each other. No, it dropped 75%. I mean, a 75% drop by Ethereum from the recent local high would put it at around $500. I'm not saying it has to go that low, but I do think it could, though. I think it could go down to 600 or so. But I think that you could the narrative could just simply be a recession, right? I mean, again, what was the narrative in 2019? We had the inverted yield curve. We also just had a crazy rally. Ethereum just had a crazy rally from June until now. And if economic activity continues to weaken over the next several months, then I think you have a case to be made that Ethereum could continue to sell off, and I also think that it will likely sell off more than Bitcoin because it's just a more volatile asset, right? Like it goes up more than Bitcoin when times are good, but it also goes down more than Bitcoin when times are bad. And sort of a counterpoint to, I know there's a common retort is that, well, Ethereum didn't put in a lower low in November, right? I've seen that a lot, right? It didn't put in a lower low. Bitcoin put in a lower low. Ethereum didn't. I would remind people, though, that Ethereum is still underperforming Bitcoin, right? Like to its first low in June, it went down more than 80%, right? And Bitcoin still hasn't gone down 80% from the all-time high. So Ethereum, it already had crashed 82% to its June low, and to its November low, it put it down at 77%. So yes, it was technically a higher low, but it had also sold off a lot more already than Bitcoin had. So I think the narrative to get the Ethereum Bitcoin valuation down to that 0.03, 0.04 is a recession risk. The unlocking of all this ETH, I think, is a risk as well. And you have to think there are some people out there that might just need the money. They might not want to sell it. Maybe they are convinced it's going to go to new highs, but they also have to go pay their rent. And they bought the Ethereum a year ago. They bought the ETH a year ago, and they just need to get the money back. that's a potential reality as well. And then the last thing I'll mention is seasonality. Ethereum is very, very seasonal. On my website, I have a chart, and I maybe you could put the chart up. But if you look at monthly returns for the Ethereum Bitcoin valuation, on average, going back basically, for all of its history, um, what you'll see is that on average, the Ethereum Bitcoin valuation does pretty well through May. And then on average, going back all the way to 2015, June through December is red, right? So we know that Ethereum tends to do the best. If it's going to do well, it tends to do the best in Q1 and Q2. But if you look at basically every single ETH Bitcoin bear market, most of them start to really roll over around the May timeframe. Last year, it was around May, right? It was in May of 2022 when I traded a lot of my ETH back to Bitcoin because I'm like, oh, guys, seasonality is not going to favor it going into the summer. And I mean, I was right initially, and then I was wrong as we went back up into the merge. I think we're facing a very similar headwind today. The difference this time, though, is there's not a merge to look forward to. There's also a potential recession that could happen, and then there's also regulatory risk. Bitcoin does not have the same type of regulatory risk that Ethereum does. And I don't know if Ethereum is a security or not. I don't know. I honestly hope it's not, right? I'm not really cheering for it to be a security, but I understand that there's a risk that it could be treated as security, and there could be a risk of people not wanting to hold it because they're worried about it being a security. Now, at the end of the day, a security is not a bad thing, right? I mean, I buy and sell securities all the time on my brokerage. I mean, all these equities are securities, but it doesn't mean that there's not going to be some fear there associated with the idiosyncratic risk of the altcoin market. Is it a security? Is it a commodity? I think we know that Bitcoin is a commodity. We don't know for sure if what everything else is. So you couple seasonality, you couple regulatory risk, you also couple the unlock of all this ETH that's continuing to happen and will continue to go on for a while. And I think you have a perfect storm to get us back down to the 0.03 to 0.04 range over the next 3 to 6 months.
I just wanted to add that I absolutely think that Ethereum is a security because think about what they do. They essentially create assets that people raise money on. I don't know if they're an investment bank. They're like they're like a decentralized online investment bank. So I don't see how they would escape any classification as a security, and I don't think they should. To be completely honest, I know the space is supposed to be decentralized and all that good stuff, but it's obvious we're not going to stay that way. So in my opinion, it will be looked at as a security in the future. Just wanted
Right.
to add that.
And I don't know if it's a security or not. My main point is that like there's an uncertainty. It's the uncertainty around whether it is or not that I think will provide a headwind for the Ethereum Bitcoin pair. It's because people don't know yet if it is or not.
Hey Ben, I posted that chart that you requested, the ETH BTC monthly returns. So for the individuals in the audience, I know we're at about 800. I posted a few things on the Nest as far as Ben's content goes, and he's describing the ETH BTC monthly returns and some pretty interesting data there. So we'll pass it over to Sefi. And guys, once again, we're here talking with Ben Cowen. If you enjoy these spaces, feel free to give our man Ben a follow. Keep up with what he's doing with into the cryptoverse, and also keep up with us here at Because Bitcoin. Thank you so much for participating in this discussion, man. And Sefi, thank you for coming on up, man. Good to have you on again, brother. What's going on, bro?
Yeah, Ben, I rarely agree with most people most of the time, but I think I agree with most of what you've said today, including all the information about the M2 money supply, and also just like the recent stock market pump fueled by the Federal Reserve taking on assets under their balance sheet, essentially, which is kind of the counterpoint to the interest rate changes that they're making. So, like, if you're buying stocks today, you are largely like fueling the Fed's exit liquidity, which is a very funny thing. But like, yeah, it's a big, massive pump and dump. that sort of seeks to benefit liquidity for the central banks, essentially. So it's just a one big mess. Now I bought that mess like back in November, December, and then kind of sold a substantial portion of the stuff that I thought was just nonsense that I just speculated upon. And then I kept some. But one of the things you'll notice right now is like if you look at Twitter as an example, really almost nobody is posting that they're buying any stocks. Nobody's posting that they're buying anything really, relatively speaking. Um, a lot of the froth in the market has gone down, but I think I see a lot of just general poverty out there. Like if people had the money to be spending on speculative assets or otherwise, I would be noticing this in lots of different ways. But I think just the number of people out there that just have like spare money to spend anywhere on this planet for a whole lot of things is not particularly impressive, which also means that the stock market is just substantially overvalued. Like the price to earnings ratios of everything are nonsense still. I remember Apple back when it was like dropped to, I think, like 12 PDE ratio and it was a value trade. Right now, it's like probably like 26, 27. Lots and lots of stocks are still sort of just nonsensically valued. And part of that is just Fed balance sheet maneuvers. But I think there's a potential rug pull there coming. And I think there's no way the crypto space necessarily avoids that if that occurs. Now, are they going to keep that floor in there like some of the guys have mentioned? It's possible. But at this point, I think I do a sort of what you do, Ben. You look at, I think, like log regression bands and things like that. I tend to sort of do something similar, just long time frames. And the lower we are below a long time frame moving average, the more likely I am to sort of like buy into something like Bitcoin, which is not something I'm doing right now. So I bought mostly under 20K again. I'm not interested at all at these prices. Like there's just way better deals going to be coming into the market all over the place. That's going to be like an even better value than Bitcoin, in my opinion, in terms of just growth potential. So like the market is just full of just discounts everywhere. And I think what's happening right now is like, so if you take your mutual funds, you take your IRAs and all of those things, a lot of people still just sort of like mind numbingly just let their money flow into those things, which the Federal Reserve is essentially taking advantage of with this recent pump. And like you think you're rich for a minute, but then that's all just going to be rug pulled from those people. And I like for the last 2 years, I have put nothing into from work mutual funds, IRAs, you name it, into traditional stocks and things. I've just let that ride in cash because I've been through the dot-com burst. I've been through 2008 and I was a buyer each time. And that is how you get rich. It is not like following like CNBC or whatever other nonsense is out there. The reality is like these types of opportunities come once in a lifetime, but what ends up happening is most people are poor when that opportunity occurs. So nobody actually is in cash. No one has any assets, or maybe like their work, inflation has already affected their work. And so therefore they're not making enough money to actually go put into risk assets or otherwise. So what do I do in these times? So dot-com bubble, 2008, whatever, I just work more. So like those are exactly the times I work more. And then I just go crazy investing over that next several years. But I would warn that like, if you look at NASDAQ peak to peak, that was a 10-year time frame after the dot-com bubble for recovery. So people should not assume necessarily that just because the stock market or whatever goes into, say, a bullish direction, that's going to mean there's going to be a V-shaped recovery and all your money's back to square one and your retirement portfolio is fine again. I think that's just unlikely. I would say, judging by what's happening now, the only like sort of major catalysts, I would say there's AI, of course, which is not a minor one. There is quantum computing, which is like maybe a 15 to 20-year arc to make that interesting, where the United States again has relative dominance. You have fusion ignition, which occurred, in December. Not in December, but it was announced in December at the Department of Energy. That is going to be another 20 to maybe 30-year arc of growth when it comes to sort of like energy markets. So like there's going to be these narratives that show up. And the other thing to bear in mind is like crypto is not the only narrative in the universe. So the problem is like while we've had kind of an interesting sort of like honeymoon period where not a lot of interesting shit besides smartphones or whatever have gone up, of course, Apple and Google and all the other sort of like big tech brands went up along with Bitcoin and along with crypto. There are going to be a lot of interesting new headwinds coming, not headwinds, but competitors coming to your money over the next 20 years. And one thing I would urge is, no matter what else you do not necessarily get trapped in the mindset that there's nothing else in the universe out there that's going to come to disrupt tech or whatever. I see just a half dozen things that are really powerful. We're talking about like just crazy developments in genetic engineering. Like AlphaFold has basically like determined the protein structures for 300 million proteins already. Like, we are about to see an age of just outlandish sort of discovery and technical growth. And what you don't want to do is necessarily be trapped in old paradigms and just stuck there. Is kind of the idea. But Ben, like, maybe to you specifically, like, well, you kind of have been generally a proponent of sort of like regression bands and sort of using that as a method. Do you tend to buy when price is below those bands, or do you tend to use those bands like as a source of like resistance support information and tend to buy the momentum? Like, what is your strategy there?
No, I don't use the regression bands that much to buy. I mean, I've created like these like risk levels that are based on price metrics, on-chain metrics, and social metrics. So that's basically what I use to sort of inform my buys and sells. Like, I set limit orders at various price levels. So like at 15K, at 16K, at 17K, all the way up to like even in the 20s. I had several limit orders filled on Bitcoin. But I also had limit orders at 14K and 13K and 12K, and those didn't hit. It's hard to know exactly how low it will go. And the issue with the regression bands is that they have to be refit every few years. So I actually have a video on my channel, I think back from like 2019 or 2020, where I went through an exercise, and I was like, all right, well, if you fit Bitcoin to the regression bands at various points, like it's always more optimistic than it should be when you look back on it in a few years. So like if you only fit it to say the first cycle worth of data, it would have already suggested Bitcoin would have hit $1 million a long time ago, right? And so then if you fit it to 2 cycles worth of data, then it still is overly optimistic. And if you set it for 3 cycles, so it basically is slowly converging. So when you go from say like cycle 3 to cycle 4, it doesn't have as much of an effect. But I think we have to remember that if you fit it to some of that data, it always tends to be a bit too optimistic for the following cycle. So you kind of have to refit it every 3 to 4 years. So I don't use logarithmic regression to inform buys or sells. I just simply use the risk level stuff. But I guess I should say maybe that's not entirely true, because there are within the risk levels that we have. So there was the risk level that I used back, or the risk metric that I used back on last cycle. It had nothing. It only was based on like price and derivatives thereof. But um, on this cycle, I've incorporated a lot of other things into it as well, like social statistics, which is why like a few days ago, everyone was calling for alt season, and I'm sitting here looking at my social metrics, like and not just mine, but other people's as well, because I track that stuff on the website, and I'm like, people are leaving the space, right? Like who's going to come buy your altcoin bags when no one cares right now about like social metrics are going down right now. That does not, I mean, it doesn't mean that assets can't rally, right? You can always have squeezes and stuff, but there's no clear cut evidence that you're going to see an alt season where these altcoins go to new highs just because they rallied up 20-30%. So now I have 3 main risk metrics that I've combined into one: price risk, on-chain risk, and social risk. But within the price risk metric, it actually does take into account like 10 different things. And I one of them actually is a logarithmic regression model. So perhaps there is some elements of that in there. But for the most part, what I mainly look at are just risk levels, and the contribution from the logarithmic regression chart on that is only going to be like 1/25th of it, so it's not going to have a huge impact.
Ben, when I just want to say one thing, Seppi, what you said about innovation, I could not agree more. I believe the next decade is going to be more innovative than perhaps the 1995 to 2010 or so period. And not only is that, not only are you seeing indications of that, also from I don't know how many people follow astrology, but also from an astrology perspective, it is pretty much telling us that that's going to be 100%. And Ben, you said something about tracking social trends. I think that's extremely important, especially with an asset like crypto. Well, with any asset, I mean, people are what make assets go up, right? So that's pretty interesting you said that, because I actually look at Google Trends sometimes when I'm making a longer term investment, and I like to see what the what the indication is on Google Trends. So that's really good stuff. And
Michael,
in general, as far as crypto goes, innovation, I know there will be a lot of competition for crypto, but I think one thing about this new technology cycle that we're headed into is it's all going to morph and work together. So it's sort of like an organism that's being built. It's not like a separate entity here, a separate entity here. It's like going to be like a symbiosis of all these different technologies that come together to create like a body, so to say. So that is the interesting thing about crypto. And I do believe that everything is going digital at some point, unless we have some type of EMP attack. So I do believe that everything is eventually going to be on the blockchain. I do believe we're early here, but that is a good point, Seppi, that we're going to see tons of
Michael,
competition for
comparing
of
like
the dollars that chase innovation.
comparing like the growth of the internet, the growth of semiconductors, the growth of systems on chips, the growth of like smartphones and everything else that you guys like are used to using today. I would say, just judging by like my sort of like thumb in the air, like my finger in the air, like to kind of judge the atmosphere here, I would say the sort of AI shift represents the biggest shift we've ever had in technology ever. So like nothing is predictable now, and I think the Fed and everybody else is going to have no clue what to do about any of this. So I think the amount of volatility related to these changes is going to be quite dramatic and really hard for people to sort of like wrap their head around. But really, one of the biggest shifts of all time in all of human history, I would say. That's kind of just
It's
Well,
funny
that
you mention that, because if you remember this year when that market rally started off in January, if I'm not mistaken, it was the day or the day after or the day before, somewhere in that little range where ChatGPT came out. And if you look at this recent rally, that's why I'm questioning if this is a bear market rally, because you look at NVIDIA, you look at Microsoft, you look at Meta, you look at Google, all these companies have an AI that they're working on. And they have NVIDIA in particular is up substantially off the bottom. That's no bear market rally. That is potentially the market pricing in some type of AI narrative. I don't want to say that. I feel it's too early to say that, but you have to keep that in
it's
consideration, in my
too late to
opinion.
say that. Actually, I would say it's we're well into it already.
I mean, it's starting. It's
Yeah, no,
here. So
it's last
the
5
cat's out the
years have been
bag, and it's
breathtaking.
not going anywhere.
Yeah, just in proteomics itself, like the number of new drug discoveries and whatnot that are going to be happening, some of the stuff that was done with like mRNA, with vaccines and everything else, all of that is what you're seeing the results of. So I would say the narrative is already in play. Like if you're just seeing GPT now, yeah, but like in healthcare, for example, we've been seeing that for quite some the impact for quite some time already. It's really old news. In some the retail customer is generally late to these things. So just something to think about.
we also have to think too, though, that even during bear markets, various assets bottom at completely different times. Like Nvidia could bottom well before something else bottoms, and some things bottom really early on, some things bottom much later on. Like Apple was putting in new lows. I think in December, right? It wasn't Apple putting in new lows. Yeah, Apple put in a new low the last week of December for this this most recent bear, and Nvidia was clearly put in its low back in October, at least these local lows. So I mean, I think you're right. I mean, I think there's some element of some assets bottom well before other assets throughout the cycle. And as far as one of the things you guys were talking about earlier was um, you know don't get stuck in just one asset class. I think that's a great thing. Like, you should be diversified. It is, to me, there are a lot of people. I know a lot of people in crypto, and they essentially have 100% of their net worth in crypto, or at least everything they're going to invest. And I think it's insane because you know, if crypto can drop 80% at a moment's notice, and you don't need your net worth dropping 80% as well. I mean, it's okay to stomach some of these losses occasionally, but you know, having, you know, being diversified throughout stocks, through, you know, even fixed income, precious metals, whatever. I think everyone should be, you know, should be diversified well enough so that you capture various moves by various sectors, and you're not tied down to the performance of any one sector.
What's going on, guys? Yeah, that's a great point, Ben. I wanted to.
Hey, Phil Payne, you're
Payne,
a little bit
covering
muffled there.
You guys
Yeah,
hear me?
you're covering your mic, brother.
Can you guys hear me now?
No, it's still the same.
Yeah, it's pretty bad, brother.
Okay, sorry, 1 second.
Ben, I had one comment that I wanted to make based off what you're saying, where things can bottom at very different times. I had a tweet about this, and of course, I cherry picked it a little bit just to prove the point. But if you go back and you look at the .com crash, and then you look at some individual names, in this specific example, I was looking at Amazon on the final capitulatory leg down for the S&P 500 in 2001, basically going to Q3 or Q4 of 2002. In the .com crash, the S&P 500 in that final leg down dove about 26%, give or take. During that same time period, Amazon rallied 200%, while the broader index, S&P 500, nuked almost 30%. Now, granted, I don't think Amazon was in the S&P 500 at that time, but I think it serves a really salient point to make, is that just because, maybe the broader index is set up to have a potential drawdown or enter a recession, as Jim Cramer says, there's a bull market somewhere. I say that kind of jokingly, but there's some truth to it.
Well, that's why, yeah. I mean, and that was why, like, I was very, you know, I was telling people back in the end of the year, I'm like, look, guys, Meta is a great deal below 100. I don't know if it's going to come. I said back then, I'm like, I think we're going to have a recession later in 2023, but there's no guarantee that some of these assets come back down to these prices, because assets bottom at various times. And, you know, I mean, Meta went down to prices it hadn't seen in years. I mean, I think Meta was actually below its 2020 low at that level when it went back below $100. I mean, it literally had not been at that price since 2016. So that's why, you know, you always have to be on the lookout for good deals, even throughout a bear market, because some assets will bottom out like well before other assets. And if you wait to assume that the entire index has to bottom and every asset will bottom with it, then you're probably going to be in for you know quite a rude awakening. I think I agree with a lot of things that you guys said about the AI stuff. I think that this decade will be, you know, we'll look back on it and just kind of see how much changed over the next decade because of AI. Perhaps this year is sort of like the shakeout year, like the time-based capitulation component before we really start to see the benefits of AI, you know, on society. One thing I look at quite frequently are the bear markets for the S&P 500 and comparing this one to prior ones. But what's more interesting beyond comparing the bear markets is comparing after the bear market to the next peak. And every single time you do that, basically, it almost makes the bear market look laughable. Like why did people care so much about it for those 2 years? Because, like, look what happened after it, you know, like, and then it doesn't matter anymore. So I think we can see the narratives, right? We can see the narratives for the bull case. But I think the bigger issue right now is we also need favorable monetary policy, you know, and so once we get back to that, I think we could potentially have another decade of economic expansion. The one thing that I'm probably somewhat concerned about is, and I think I mentioned this earlier, going back to the AI thing, is, you know, the Fed's trying to get the unemployment rate to 4.5%. What happens if they get there and then it goes to 8% because so many people are losing their jobs to AI? I mean, the companies might actually be more profitable. You know, maybe asset valuations keep going up because, you know, you're no longer having to pay for all these employees, but it could really hurt a lot of people if they're out of a job. So it's going to be a really interesting decade for sure.
Yeah, one thing about that, I have a really unpopular opinion. that UBI is going to be mandatory, and whoever doesn't sign aboard as a politician is going to be asked out. And a lot of people get mad at that, and I completely understand why. But in my opinion, UBI is going to be mandatory, and it's going to be, unfortunately, we don't have the type of leadership that makes me confident in something like UBI being, put out, because I believe they'll have all types of crazy conditions attached to it. But in my opinion, it's just a matter of time. I wouldn't be surprised if it's an election 2024 issue in the U.S.
Hey, is Michael speaking at the current moment? I'm not able to.
I don't hear him either. It sounded like he was, and then
Yeah.
stopped
He
there.
was a second ago.
Feel
Okay.
pain. Feel pain. Are you able to speak now? Your mic was a little muffled
Can you
earlier.
guys
Curious if you.
can you guys hear me?
Yep, you
Yeah,
sound great.
you're good, brother. You're good. You're good.
Awesome. Yeah, what's going on, everyone? Yeah, I was just wanted to go over a couple of good points that that Ben made about like meta and equities and stuff. Back in December, like Ben said, it went down to 2015 levels, and it was such a capitulatory such a capitulatory moment. Like, you had Jim Cramer crying on TV, man, because he told people to buy one of the biggest, like one of the four best and biggest companies in the world. And people are out here like calling for, it could go another 50% from here, but it was basically down in a straight line. So I think at certain points like that, the risk to reward of not having exposure at those levels is, far ways just like buying some spot. Meta and coin are like my only equity exposure. So because I think both those are pretty solid bets over the next like 5-10 years. But I also I also thought it was a good point about the diversification, Ben, because I think the industry is way too early to be diversified like within just crypto. Because I know a lot of people that they have like 30 different altcoins, and they think that's like diversification. So just wanted to point out that like the industry is way too early to have 40 different cryptocurrencies. I think you should probably just focus, as a general note, on maybe two or three max, and really do your research on like which projects seem lucrative.
If you look at, you're right. If you look at correlation coefficients, like on the website, I'm looking at the Pearson correlation coefficient and the Spearman correlation coefficients on like 30, 60, 90-day time frames and so on and so forth. You will see that most cryptocurrencies are extremely correlated, right? So, if you own Solana and Polkadot and Cardano, yes, I mean, they can move somewhat. They can move somewhat differently, but they're also very highly correlated to each other oftentimes. And so, yeah, when you talk about diversification, we're talking about inter-asset class diversification, not intra-asset class diversification. Even within crypto, I think diversification should look like, especially, when macro times are good, I'd say Bitcoin, Ethereum, and then maybe two or three altcoins. But you really don't need 50 different altcoins to get the exposure to the cryptoverse that you're looking for. You really only need Bitcoin, Ethereum, and maybe two or three others. And I think you're going to do a lot better than trying to pick out like 25 different altcoins, because all it's going to do is make your taxes a lot more complicated, and you're probably going to miss a lot of the moves. And even if you pick out one that goes up 10x, if all the other ones went to zero, then you still haven't really made any money.
Ben, and touching upon diversification and all those things, since I've followed you, and I don't mean to turn this into a show space or anything, but you're a very early supporter of Cardano. So, what is it exactly about Cardano that has kept you in the loop with all their developments over the recent years? Because usually, your channel is mainly consisted of Bitcoin and Ethereum, and sometimes you like touch upon Cardano and all those things. And truth be told, most market participants in crypto, they tend to rotate every single cycle from this ETH killer, the next ETH killer, and they rotate into so many different projects that they think is the next 100x. Whether it's yourself, you've been very persistent and really consistent on projects such as Cardano. I know it's somewhat of a pivot
No,
from
it's fine. I don't mind.
yeah.
No, I don't mind. You know, I mean, I was making videos on Cardano on my channel when it was at 2 cents, and people were laughing at me. And then it's like, who was laughing when it went to $3? You know, I mean, this is a 150x move, and the main reason was because I saw what happened in 2017 with Ethereum gas fees, and I'm like, you know, I looked at it and I'm like, well, I know the development. I mean, I know these gas fees aren't going to go down before the next bull market comes, and the same narrative is going to be there, of is there something better, right? Is there something else? Now, I do think Ethereum is ahead of Cardano, and you know, no matter what I say, I piss people off, right? Because I'll say Ethereum is ahead of Cardano, that's going to piss off everyone who likes Cardano. But I'll also say Ethereum is going to bleed to Bitcoin, that that pisses off the Ethereum maxis. But then I also say that Bitcoin USD is probably going to go back down. So I'm really good at pissing everyone off, right? So what I would say though with regards to Cardano is that it's a hedge, right? And I think it's always a good idea to have a hedge. And so I was betting very big on Bitcoin and Ethereum, but you know, you never really know what's going to happen, right? There's always the idiosyncratic risk of any individual cryptocurrency. I mean, you have Bitcoin, you have Ethereum, but you know, what about a higher risk play that is a hedge against some of these other narratives? And I was like, well, you know, these gas fee narratives, they're going to come back. You know, and no one's going to like the gas fees, just like they hated them in 2017. They're going to hate them in 2021 too. And there's going to be some narratives there to send the price higher. But the other thing that you have to look at when looking at an altcoin, and you know, I spend countless hours trying to you know get people to look at this stuff. Look at altcoin pairs, like look at their Bitcoin valuations, right? If you look at most alt Bitcoin pairs, they're degenerative. They bleed over the macro scale, even from one cycle to another. You know, I mean, look at the Litecoin Bitcoin valuation. Look at the XRP Bitcoin valuation, the Monero Bitcoin valuation. Most of these altcoins over long periods of time, they bleed against Bitcoin. So if you're a long-term investor who only kind of comes in and scoops up something every couple years, which honestly is probably the best the best way to do it if we're being honest, right? But if you're one of these longer term value investors, you know, are you going to pick something that is just bleeding to another asset? Like Bitcoin is the safest play. It's a commodity. It's not going to be subject to the same regulatory risk as everything else. So why would you go buy an altcoin when it's bleeding against Bitcoin? So back in 2019, the reason I was supportive of ADA back then was because I mean it started off at 400 satoshis. In 2019, it was finding support at 400 satoshis, and I was like, look, guys, this one it might not bleed. It might go back up against Bitcoin, back to the highs, and it did. Right? I mean, it did. It went back to the highs, and ever since then, I mean, I've been bearish on ADA for I don't know 16 months now. Um, because I think it's going back down to the same valuations that no one thinks it can go to. You know, right now it's sitting at 1,400 satoshis or so. I think at the very least it's going back to 800, and it could go down to 400. But like I was saying with Ethereum earlier, right? Like if it goes to 400 satoshis, it would probably be because Bitcoin USD is going up quicker than ADA is, because Bitcoin USD leads the bull market, right? It leads the bull market. Initially, most things get devalued against Bitcoin. And so I think you're likely going to see ADA fall back down to 800 Satoshis in the coming months. And if it goes down to 400, it's probably because it's probably just because the early stages of another bull market. The other thing I'll say,
Ben, real quick though, remember, outside of a few nerds that are sort of understand statistics, which is probably really less than 1% of the population by any sort of like, even as a conservative metric, like 90% of people aren't that great at math. So like the number of people that are actually doing comparisons to relative sort
right,
of Bitcoin charts is low, right?
but
It's
here's the
like that's
thing.
part of the problem.
But here's the thing, like, I mean, you know, people should be able to understand that if an asset goes down 95% against an asset that went down 80%, like that's not a good thing, you know? Like
Yeah. It
it
seems
seems
intuitive to us, but I would say about 90% of people on this planet, it's not. And that's
right.
just
And so
the simple nature of it.
everyone just sort of values their portfolio in US dollars. and they'll brag about it. And I'm like, well, that's great, but had you just DCA'd Bitcoin, you probably would have actually had more money. Like, yeah, I mean, even look at the last 3 months. Yes, a lot of altcoins went up, but guess what else went up? The Bitcoin dominance, right? Bitcoin outperformed a majority of the altcoin market over the last 90 days, and I contend that it will probably outperform a majority of the altcoin market over the next 90 days as well. So really, and also, I mean, Cardano. And by the way, I mean, I say this as someone who's still very bearish on ADA Bitcoin. I think ADA USD will likely put in new lows, which is why I haven't bought any in over 16 months. I haven't even considered adding any. I mean, I converted a lot of my altcoins back to Bitcoin and back to USD a long time ago. And I don't think it's over. I don't think the altcoin reckoning is over. But also, I mean, Cardano is more decentralized than some of the other layer ones. It also, it also wasn't subject to the same FTX drama like Solana was. Um, and so, I mean, they do move at like a snail's pace, admittedly. But I mean, myself, I mean, I'm an academic, right? Like I have a PhD in nuclear engineering, and I appreciated the approach of just a very slower academic process that Cardano was doing, rather than just rushing a product out to market and then putting duct tape over it for the next 5 years, trying to patch every single problem that pops up. Look at what happened to a lot of these chains that did that. And I looked into Solana way back in the day. I mean, I looked into it, and I even tried running my own validator for Solana. But you know what? When I looked into it, it costs like $100K a year to run a validator on Solana. And I'm like, this is not how is this decentralized? Like, most people can't afford to run something that's going to cost someone 100K a year. And then furthermore, I think it was like 1 SOL per day was like a fee that you had to pay. I mean, it's not very much now, but at one point it was like $100 or $200. And it's just like, who's going to do that? Who's going to pay for this? Furthermore, Solana, the blockchain, um, it was actually moving higher at like terabytes per year. I mean, I could not see the justification for those asset valuations, and that's why I've been more so bearish on that. And even Luna, I mean, Luna was one that everyone was all over back then, and I was like, look, guys, I mean, 20% yield is not a sustainable thing on UST, right? This is not a sustainable thing. So you have to. The hard part, I think, about being a commentator in financial markets is that people don't always understand that something can be a scam, or it cannot work out even if the price is going up, right? Like, the price can go up 50x and it still go to zero. And no one knows when it's going to turn. It's just a casino, right? I heard Warren Buffett give a great analogy once, and it really stuck with me. And the analogy is essentially like, we're all at a dance, and the everyone who's left at the dance, who's still dancing at midnight, is going to turn into like pumpkins and mice, right? Everyone who's still at the dance after midnight is going to turn into pumpkins and so everyone thinks they're going to leave the dance before midnight, right? Everyone thinks, all right, we're going to be the ones to leave the dance before it turns midnight. The issue is there's not a clock on the wall. No one knows when it's going to turn midnight. And that's the same thing with the altcoin market. Like, everyone thinks that they're going to be the ones to get out of it before it comes crashing down. But the reality is there's not a clock on the wall. There's no one to tell you exactly when that's going to occur. So that's the main issue. And I mean, again, to sort of go back to your point, the whole Cardano thing was more so, it was, look, guys, it's 98.5% down from the all-time high. It's 2 cents, like, it's literally 2 cents. The market cap is tiny. If you believe in the future of crypto and you think it's worthwhile to have a hedge against Ethereum, Cardano is a good play. And I mean, it turned out it was, right. I mean, it went up 150x. It's just trying to figure out, which projects are actually going to stick around. And some people ask me throughout the entire bear market, they're like, which altcoins are you interested in? You know, and I'm like, guys, just don't. If you're still asking me, it's too early. Like, you basically wait until the dust has settled, and then you see which altcoins are still even around. Like, look at the ones that didn't go to zero, like Luna. Look at the ones that are still, providing updates to their, to their projects 2 years after the highs were in for Bitcoin. Those are the projects that you might want to start to bet on. You don't want to bet on altcoins in general. Until you really see who's going to stick around, because a lot of people, they put out an altcoin. It's mostly just copied code, fork code from another project. They they shill it to people. They get rich, they leave, and it happens to countless altcoins, and it will probably happen countless more times as well.
So, Ben, I want to touch upon what you were saying about academically sound projects. And I know Shango Unchained was in the audience, and she comes from the dev space, particularly the Cosmos and Tinderman space, where products like Matic and Fetch have been built on, and Binance. So, Shango, I want to welcome you on. Thank you so much for participating. And yeah, I'm not sure if you're able to hear me. How you doing?
Yeah, I can hear you. Thanks for having me on. I wasn't expecting to be on. It honestly came on. I was listening to Seppi speak, and a lot of what he said was resonating with me. So it was just a good space. Thank you.
Yeah, no problem. No problem at all. Good to have you on here. So Ben, as far as like academically sound projects and all that stuff, outside of Cardano, are there any other developments in the crypto ecosystem that you're particularly paying attention to, or are you just like, just awaiting for certain metrics to hit for you to be doing that? I understand that in 2019 we had sort of like the ETH layer twos starting to come out with developments and all that stuff. We had things like Matic and all that stuff. So would really like to know like what is Ben looking at as far as the next wave of innovation? Is it things like blockchain modularity, right? Like your Celestials, your fuel networks? Is it something like roll-ups? Like I know like some layer threes are coming out, but that's a whole different other sector of the space that I'm still getting into. So would love to know your thoughts as far as the next, what you would call the next wave of innovation in the crypto space.
Yeah, I mean, I don't have any super compelling thoughts at this time, because I just feel like we're fighting a losing battle with the monetary policy. So no matter how great fundamentals are of anything, it's just likely not going to be doing that great for a little while. I do think that roll-ups are the way to go. So I would generally be bullish on those long term. And that was one of the reasons why I think Ethereum is just so much further ahead than its competitors, because I think they identified that years before other projects did. And so I think they sort of have a head up or a leg up on the competition in that regard. I'm not gonna put out any specific altcoins, because I don't really I'm kind of the opinion, and I have been for the last like 15, 16 months, that altcoins are just too risky. And I don't want to run the risk of saying altcoins and people going out and buying them and then blaming me. And so my general my general view right now is that altcoins are bleeding back to Bitcoin, and they're just not worth the risk. I think that narrative will likely change around September, October is when I think that narrative could finally change, and find um, some of these altcoins potentially finding their at least local bottoms against Bitcoin. And at that time, I would be more interested in exploring the altcoin and the altcoin market. And I mean, an investor like myself naturally is going to miss out on a lot of these rallies, right? Like the January to March rally of 2022, the July to August rally of 2022. With the altcoin market, right? Like I miss out on these things, but like I don't I don't really care. I just as we started into 2022, I just said cash is king. I'm in wealth preservation mode for a while, and when I think the coast is clear, I'll come out of hiding and start speculating dubiously again on some of the stuff. But until we get to that point, I'm more so just happy sitting in cash and keeping my crypto portfolio just Bitcoin.
Shango, go ahead.
Hey, so right, I can't speak to the price action aspect, but what typically happens in the space is concepts are developed in year one, and then by year five, some of those concepts get validated by the market. So what I'm speaking to is what's in the proof of concept phase and what's at the bleeding edge of the industry right now, which you kind of touched on, King Wabi, which is that now the narrative is shifting to roll-ups. And I think the most interesting infrastructure play is something similar to eigenlayer, where the layer ones themselves aren't necessarily acting as the like de facto settlement or execution layers anymore. It's that and a whole application could have its own rollup and then use a layer one as a DA layer. So that's part of the value prop of the modular stack. That's the narrative that's being pushed by Celestia, and other projects that fall under this category would be Celestia, like Polygon Avail, Eigenlayer, I think Near Protocol also has indicated that they're doing something like this too. So right now we're in the proof of concept phase, and there's about like I could see a little inkling of a Cambrian explosion of projects that are modularizing the layer one and saying, okay, we're really just gonna do DA, um, and then allowing layer twos as in the applications to build its own rollup. So a couple of thought leaders like Polonia have predicted that 90% of decentralized applications in the future, in the short term future, as in like 5 years from now, will be run as their own rollups, and then they just use any layer one as a DA layer. So the core concept behind Eigenlayer is that you could kind of plug and play, like swap around DA layers, and then as a step function improvement over that idea is the mesh security idea that Sunny Agrawal proposed, which is this realization that wait, why do we need enshrined consensus where an app, if it gets launched on one layer one, it needs to use that layer one and it subjects its users to the gas fees of a highly used layer one like Ethereum. Like, why can't we swap it around? So now we're saying that, okay, if we do this, we could have Bitcoin security, we could have Ethereum security, we could have, Cosmos Hub security, we got Osmosis security. You could plug and play any which way you want, and it becomes this sort of mesh, like an internet, where you could use anything for its security or you could use anything for its DA, but the execution is abstracted away from that. So I think that's a very powerful concept. And if this concept gets validated in the next 5 years, that's what we're going to see.
Yeah, touching upon Eigenlayer, I think it might make solutions like Chainlink and also a lot of these other like layer ones pretty redundant. I feel like there's a current dilution going on in the market. We don't really need all these layer ones and really like layer ones over layer ones, right? I feel like there's an issue with fragmented liquidity, but yeah, that's a very interesting thought point. Thank you so much, and I definitely agree we're in the proof of concept phase, but yeah, some great discussions here, Ben. I'm not sure if you wanted to touch upon what Shango just said.
Well, I was going to say that, I mean, what you just said with regards to like there's so many different projects right now that are building, and I think some of the issues is that the money is spread out across like 20,000 different cryptocurrencies, and when in reality like there's only a handful, I think, that actually are going to provide real world utility um, over the long haul. I mean, the reality is we don't need 20,000 cryptocurrencies, um, we don't need nearly that many. I think that there is a lot of innovation. I mean, I have followed along with what Ethereum's doing and all the developments over there. The main issue that I have right now, and this is why it sort of butts heads with a lot of people. It's not that what crypto developers are doing is not great. It's not that what they're doing is not revolutionary. It's not that it won't change the world in some way. It's that it doesn't matter until until monetary policy gets more favorable. It's a headwind. And as an investor, I hate I hate that that's the reality. But I think there's a lot of truth that that's the reality that we live in, right? Like there's a ton of innovation going on all sorts of different projects. But until monetary policy is more favorable, I don't really think the bull case is there. I mean, it sucks. Like it sucks that we're just dependent on the Federal Reserve to dictate when we're in bull markets and when we're not. Um, but that's where I more or less stand. And I don't want to make people feel like what they're working on. I think there is a lot of element of truth to like what is being built is good, and it should provide the infrastructure for the next bull run. If you think back to to 2018, 2019, 2020, it was the people that kept building that benefited the most. We didn't know exactly when the next bull run was going to come, but it was those people that built that ultimately reaped the rewards for that. And guess when it came? I mean, it came when the Fed printed trillions of dollars. It didn't come when they were lowering, or then when they were raising interest rates. It didn't come during any of those periods. So I just wanted to sort of clarify my stance. I mean, I think a lot of people paint me off as like a Bitcoin maxi, but I do think there's just a time to invest like a Bitcoin maxi, and then there's a time to say, you know what, all these other altcoins, all these other projects, you've had developers building them for 2 years. They're not going anywhere. People are using the ecosystem. They're likely going to explode in the next bull market, and that's when you invest when you can sort of see the end of the light at the end of the tunnel with regards to monetary policy. So I just wanted to clarify that.
Ben, speaking of monetary policy and all that stuff, and really just policy in general, earlier this week we had, good old Chairman Gary Gensler, or Uncle Gary, as we like to call him over here. It really seems that he's protecting us from, life changing airdrops and some protocols that are really cool, man. So I wanted to know your thoughts. Do you think Gary is going to basically siphon innovation and really most of the crypto industry here in the US to other parts that seem to be flourishing, specifically in the East? You have Singapore, you have Shanghai, you have Dubai, and really really everywhere outside of America that's intaking these companies to really work on what you would call, as Michael stated earlier, drivers of the next tech boom that will be very reminiscent, and I'm in agreement of the mid to late 90s.
I mean, I don't think he's doing it. I feel like I know he's doing it. I mean, look, I mean, there's so many people that have already left. I mean, even Coinbase is talking about leaving now, which is a pretty big deal. Um, if you're just going to go around and hand out Wells notices to everyone, and you're not going to give them the regulatory framework to operate in a manner that's not going to get them constantly fined and sued, then what else should you expect? Like who who wants to open a company that's built around crypto in the United States right now when you there's a good chance you're just going to be served a Wells notice, or there's a good chance you're going to get sued for selling unregistered securities. He is. I think he is driving innovation overseas. I think he's already done it. I think that he will continue to do it. Um, I I I think the biggest issue I have is we just need an answer. And I mean, like, I know everyone's sort of like, is it a security, is it not? And I know most people want every single thing to just not be a security. The reality is a lot of altcoins are likely going to be declared securities, right? Like that is a reality. Some of them have already settled with the SEC about their initial, their ICOs and whatnot. That is a reality. But I continue to remind people that it sucks. But look, I mean, equities are securities as well. I mean, we can get beyond it. We need for this to just stop being a thing is the issue. Is like we need to just know, like, like if there's securities, there's securities, and I'm sure the companies that are building and innovating will figure out a way to deal with that. They'll figure out a way to get registered with the SEC. They'll make sure they're in compliance. The projects that can do so. Unfortunately, some projects will die out. Some of those projects that might die out could die out not because their tech isn't great, but just because they're not going to have the infrastructure to sort of do what they would need to do to really register as security. Um, but I like I've been in crypto for a long time, and this topic has been coming up forever. And what needs to happen, I think, and sooner would be better, is we just need regulatory clarity as soon as possible, so that the industry can thrive, right? I mean, like look at the dot-com bubble. Look at and look at all the great companies that came out of it, right? They're all secure, they're all secure. Like the stock is a security, but it doesn't mean that the company was not valuable. It doesn't mean that they didn't provide utility. I think the same thing is it could happen here, right? Except and now it's now people are sort of debating whether the securities or not. Back then they weren't debating that, right? They were just securities. But I think that's where we are. He's driving innovation overseas. We don't have any type of, and even I think he told I think he told some of these exchanges that, like, well, they need to go fill out a form, which is kind of crazy because it's like, well, what are you talking about? Especially with Kraken and with Coinbase, they, I mean, they are some of the more compliant ones, and they don't even know what they need to do. And that Coinbase has the money. That they have them. I mean, if there's something that they could do to sort of solidify that what they're doing, that they're not selling, and I mean, I'm sure they would love to do that. It's just that there's no way to know how to do that. And so until we get past this cloud, it's going to hang over the cryptoverse. Like, I don't see it going away. It's going to hang over the cryptoverse. But furthermore, it's going to keep certain investors out of the cryptoverse, right? And the cryptoverse is like a lake or some inlet, and we're not really connected to the ocean because where all the real liquidity is. Because what there's not going to be a lot of large investors that are going to want to come in and buy Ethereum if there's a risk of it being declared a security next week, and every exchange in the United States offering it is going to get sued for selling an unregistered security. The way you get Ethereum to $10,000 is we get beyond this, these arguments as to whether it's security or not. We figure out what it is, and then we build around that, and that's how you get to 10K per ETH. But it's not. I just don't think it's happening until we get this regulatory clarity, and hopefully it comes sooner rather than later.
Yeah, some interesting points there, man. Some interesting points. Definitely in agreement. Gary is basically trying to force everyone to buy to buy through Cash App and Venmo and other things like that. And I'm not sure how all that stuff works. Like, do they actually buy the actual Bitcoin? Because in my opinion, if you're not able to withdraw and really interact with the ecosystem, then I mean, you're just becoming a counterparty to said exchange or whatever, right? Like, I know Fidelity offered their services, but I don't even think you're able to withdraw it. And it's sort of like, Ben, if you remember back in December of 2017 when the CME and CBOE opened up Bitcoin futures. I feel like ever since then we haven't really seen the parabola that Bitcoin is known for. It's just always been just choppy upwards action whenever we're in upwards momentum, and then whenever whenever we get flushed out, it's like if someone turned off the switch. I remember back when we were at 16K, you had made a post saying that, like, it looks like somebody turned off the switches over at, like, the Bitcoin company or something, because we were in like $100 range. And um although regulation is is coming, right, I feel like there should be some very light touches, because or else we're just playing in another commodities market, and that's not really fun. But I want to start wrapping up the space. We've been going for about 3 hours, but I brought up a good personal friend of mine, Kayvon. He had one question to ask you, Ben. if you have like an extra 5 minutes or so.
Yeah, sure.
Hey,
Go ahead, Kayvon.
hey, Wabi. Thank you, Ben. It's great to be in a space with you. So I was educated as an engineer. I run a restaurant now. It's my life, and I'm trying to speculate on crypto. And I just wanted to know about your origin story. I've listened to you for a long time, and I think way back in the day, I put Wabi onto you. So I don't know, but could you tell us your origin story and how your engineering education kind of informs and shaped the path that you're on, and how you find yourself here today?
Sure. I mean, I don't really have a background in finance or anything. I know a lot of people who talk about markets do. Like my undergrad was, I started off as an aerospace engineer back in undergrad. I did that for a couple years. Did an internship at NASA Johnson, and also was over at NASA Langley for a little bit. And I switched over. Actually, I got a little bit annoyed with the bureaucratic system that was kind of existing. So I actually switched over to, I did a major in math, a minor in physics, and then I went and did a master's and PhD in nuclear engineering. It was during my undergrad, so during math, my undergrad math degree, I took a cryptography class, and in that cryptography class, we obviously did not learn about Bitcoin, but naturally inquisitive minds, I was just sort of looking into it. This was back in like 2011, right? And that was when I first heard about Bitcoin. Unfortunately, I was a poor college kid. I don't even think the idea of investing in it never even occurred to me. It was just like, oh, that's a cool idea. But so I learned about it back then, and then in grad school, I became obviously a lot more in tune with the markets. I was more interested in it. I'd seen these rallies take place, and so essentially what happened is I just got burned in the cryptoverse on multiple occasions. It's easy to buy into the hype and whatnot, and so then I figured that, hey, after all these cycles, maybe I could make a YouTube channel and talk about some of these trends. Not really expecting to get everything right. I know I don't. I get a lot of things wrong, but just trying to help people understand that there's phases of the cycle where altcoins bleed back to Bitcoin, and there's phases of the cycle where they don't, and just trying to help people understand how to sort of maximize that. And I mean, as far as the education goes, I mean, a lot of what you see on YouTube is like the technical analysis and whatnot, and I do some of that, admittedly, but I also thought, like, why not try to provide a more data centric approach, right? Like why not look at like modern portfolio theory and calculating out your risk adjusted returns for Bitcoin and Ethereum and for a handful of altcoins? Why not look at seasonality among various trading pairs? And I mean, you don't need, I mean, the truth is, you don't need a PhD in nuclear engineering to do this sort of stuff, right? It's just that I think a lot of people, um, they, they just they don't take the time necessarily, or maybe they don't have access to the data to really look at these more so longer term trends. And so I just decided, hey, why don't I spend some time, gather as much data as I can, um, try to figure out what way the markets are likely going to head based on mining some of this data. And and when I started in 2019, I was a postdoc at a national lab. I was just out of, this is my first year as a postdoc. I was doing equation of state modeling for high energy density physics. And I mean, I didn't know what I was doing on YouTube. Like, I just made some videos, and I think they got like 10 views, 100 views. No one really cared. I was making one video every week or two. And then I made a video on Bitcoin using this like using the logarithmic regression model stuff. And then and then my channel took off, right? And then I still worked as a postdoc for a while, and then I was converted to a staff scientist at the national lab, which was my dream job. I had gotten my PhD to do this job, and after being a staff scientist for 4 months, I quit because I could not do both things well. Like, I couldn't focus on financial markets and focus on my day job and do both of them well. So I had to pick one, right? I had to pick one. And I was like, well, I'm clearly going to pick the thing that gives me more freedom to be my own boss and create what I want. So I did that. I mean, and I quit my job in January of 2021, um, and I mean that's essentially my background. And now I have a website where we have all sorts of various models and everything. And I think a lot of people assume that I built this website by myself, but it's not true. I actually have like 4 software.
Oh, you cut off there, brother. You got off there, Ben.
I Can you hear me now?
Yeah, you cut off right after you said 4, just like CZ 4.
Oh,
4.
I was just saying I have 4 software developers that work for me that help me build this website, right? So it's not just me; it's a team of people, and and a lot of them actually also have backgrounds in science and engineering. Actually, one of them has a master's in nuclear engineering. The other one has like a bachelor's in physics. Um, the idea is, you can, and by the way, a lot of the quants on Wall Street, their backgrounds were from the STEM fields, right? Science, technology, engineering, mathematics. That's where they came from, because the skills that you can learn as a scientist and engineer, you can apply to financial markets, and oftentimes it's actually a lot more lucrative if you apply it to financial markets. Um, so that's sort of the background. I just thought, hey, maybe we can try to bring some type of sense to this space that seems very irrational, and maybe it'll help a few people.
Yeah, 100%. Thank you for quitting your job and doing what you do. I think you're a great voice in the space, and
Unless there's a big nuclear accident, in which case it's Ben's fault.
he's not working
Yeah.
on it, so
Maybe
we're
I'd have to
good.
go back to work.
Well, I guess to wrap up the space, Ben, are you going to be at BTC Miami, brother?
Yes.
All right, cool. All right, I look forward to playing some chess with you, man. I think that would be some epic content. Playing chess with Ben.
Sounds good.
that'll be pretty fun, man. Yeah. So Max, we're gonna need we're gonna need we're gonna need to get a few chessboard pieces to play with Ben. So looking forward to that, man. And guys, I want to thank you all for participating in the space. I want to give a shout out to our speakers. First off, to Big Ben, the man himself, for coming on again and talking some shop with us. We dived into a variety of topics. This was truly sort of like a mega space, and want to thank Big Ben for that. Want to thank Seffi, Max, Payne, Will, Snorlax, Kayvon, Shiongo, and also Michael, who added a ton of value to the space. And yeah, guys, if you enjoy this conversation, also feel free to follow us here at Because Bitcoin. My name's Wabi. I host spaces for Because Bitcoin throughout the week, sometimes twice a day, sometimes 3 times a day. Later on, further along the day at 5:30 p.m. Eastern, I'll be hosting Unsheathed, and then at 8 p.m. we'll be hosting Magoo, and we also have our other contents streaming right after this space. So a lot of content for you guys, devs, founders, community thought leaders, innovators like Ben that have really contributed a lot of value to the space and just present ultimate data that's actionable and applicable to the everyday person. And, we need more of that. So thank you all so much for supporting us. It truly means the world. Before we wrap up the space, I want you guys to take a look up on the Nest. Posted some pretty cool content from all the things that we had described today, such as the alt BTC pairs that Ben was mentioning, the summer lull, eigenlayer, like Django had mentioned, and also Max's analogy about Amazon and the S&P. I sort of think that it's probably things like Matic that we can relate to that as far as bottoming out before BTC. And we also discussed the ETH BTC monthly returns at the bottom. And yeah, of course, one of the first things we touched upon were sort of the pre-halving price actions from the market as we get closer and closer to the halving. So Ben, thank you from Because Bitcoin to you guys at Into the Cryptoverse for coming on and talking shop for 3 hours. Truly, this is really a once in a lifetime opportunity. But you're here again, man. So God bless you, your family, your friends. I hope everything is all right, brother. And looking forward to playing some chess with you over at BTC Miami. And I'm gonna put on my rally hat. I'm gonna schedule my Forbes interview for the chess tournament. We're gonna have a Bitcoin Miami chess tournament. How does that sound, man? I think that'd be pretty epic. What do you think, Ben?
Sounds good to me.
All right, let's go. So thank you so much, guys. You can catch a replay of this up on our YouTube channel in the next few minutes. So shout out to our producers as well. And we'll see you guys in a couple of hours. And take care, everyone. God bless you. Thank you so much for supporting us here Because Bitcoin. Make sure to give Big Ben a follow and keep up to date with everything that he's doing. So take care, everyone. Thank you so much. Bye-bye.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm gonna get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000. Depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.